Okay, looks like I'm live. Let's get this straightened up. Let's fix my chair. Okay, is the counter going? Counter's going. I'll just wait for YouTube to and there's YouTube telling me that I'm live. So let's go. We'll we'll answer some questions here. Just jump right in. Any updated opinions on the current political race? Kamala has seemed to gain lots of ground since July. Yeah, you can't argue with that. Some polls have her leading, especially in swing states. That's important. Some, I think last week on Bloomberg, there was a mention. It's right around noon. There's a political hour that she has the higher probability of winning the election. But she's riding a wave right now because she seems to be sensible. What she has going for her, and what I think is a little underestimated, is she didn't have to campaign for her position. So she didn't have to pander to the progressive wing of the party and say a whole bunch of stupid stuff, because that's what you got to do to get them to vote for you. Is you got to say stupid stuff. So you usually, campaign to the left and then you pivot to the middle for the general. She didn't have to say stupid stuff. So there's not a lot to hold against her other than some things in history. And Republicans are going to try, I'm sure, to paint her as the left of Bernie Sanders candidate, that this is a socialist candidate and it's a continuation of the Biden agenda, just more to the left, which is probably their best strategy. But she didn't have to say stupid stuff. I think she's going to ride a wave all the way to Chicago, and then after the DNC, we'll see, right? Join the applied level with profits from ABR. I'm getting impatient, waiting for it to come down to the lower $12. Oh, ABR coming down. Oh, okay. I was a little confused. Is it possible we missed our chance? You never know with these things. All you need is a good credit scare. ABR relies on a lot of short-term credit and relies heavily on the liability side, on the availability of credit. You get a credit scare, yeah. You can go much past $12. That's the one thing ABR can't fight is a credit scare. They've been able to fight everything off. The short reports, they're still standing. More short reports, they're still standing. DOJ, FBI investigation, they're still standing. But credit, that's their lifeblood is credit. So I don't see anything on the horizon right now. If you are interested in the $12 strike or the $12.50 strike, the January still have some good premium. It's far enough away. Look at selling January 12.50s or January 10s. Long 100 shares of Lamb Weston sold a September 20 put for $62.50 exercise. If this stock goes up to $62.50, this means after this point I'm 100% hedged. Not by selling a put. Selling a put adds to your position. Position with the exit being $62.50 plus premium I got. No, if you're short a put and it's above $62.50, you get the premium. But if you're already long 100 shares and it's below $62.50, you'll have another 100 shares put to you. So that's not a hedge. That's actually adding to your delta, your net delta that you have. So unless you meant to say, I sold a September 20 call at $62.50, and if it goes above $62.50, doesn't mean you're 100% hedged. If it stays above $62.50, you're good. It'll be called away from you at $62.50 plus the premium for the call if your average cost is $62.50. right? If your average cost is 62.50 or below. No, you wouldn't be hedged if you sold 62.50 put on selling. Oh, somebody answered you. Okay, I should read a couple down. Explain more about how the market maker functions and how they react to increased vol and how their delta hedging impacts pricing movements. Well, a market maker is there to provide liquidity. So you'll make the bid-ask spread, but you must be a liquidity provider that if no one is willing to print an offer and no one's willing to print a bid, you will step in and you will do it. You will be a liquidity provider. In exchange for that, you'll make the spread between the bid and the ask because you'll be selling on the offer and buying on the ask. You're going to, depending on the day, I mean, you'll be buying, selling, buying, selling, buying, selling. Every so often, your net delta will get out of line, and you'll have to either buy or sell shares of the underlying, depending on which side your deltas are falling on, so that you can be delta hedged. So if there's more call buying, the market maker, if there's not enough liquidity being provided by other participants in the market, like I can step in and provide liquidity. If somebody wants to buy a call, I'm perfectly willing to sell them a call. Let's say the market maker doesn't have to. The market maker can say, okay, well, I've got somebody else that wants to do it. I can put a bid, an offer in the market. I don't need the market maker. I can make my own market. But if in the lack of anyone else, the market maker should be the seller of that call. And if the market maker is the seller of the call, they have negative delta that have to buy underlying shares to get delta neutral. But they're buying and selling at the same time. They're buying, they're selling, they're doing the puts and the calls. So their deltas will, depending on what they're doing, it's when it moves in one direction for a period of time, they'll want to hedge that out, balance their book. They would be forced to buy the underlying shares in the face of extreme call buying with no other market participants willing to sell other than the market maker. How they react to increased vol. If you've watched before any significant event, like before a jobs event at 8:30, once you get to about 8:29:50, the spreads start to widen on almost all things. You can really see it depending on which currencies are involved. U.S. Canadian currencies, those spreads will start to widen, and then they decrease after, because nobody really, if the market maker is going to step in before, they're going to want some compensation with a wider spread because that's their compensation. So the more risk the market maker feels is in the market, the wider the bid-ask spread goes. So in fast-moving down markets where the sell orders are huge, they will spread apart a lot. And you would think that, there should be another one coming in to provide liquidity because there's competition among them. Sometimes they just pull their, they'll do their job. They'll post a bid and an offer, but they'll be so wide apart as to say, well, this is what we need to be compensated for. That's what they did on Monday morning, not the past Monday, but the Monday before. Clearing CFA level 3 at 21, 22, 23 is considered to be bad and also frowned upon. This is news to me. Can you tell the good and the bad for the same? The good and the bad for the same. And also, will you take any Q&A sessions for CFA level 3 again? I don't know. This is the first time I've heard that it's a bad thing doing it at 21, 22, 23. I would say that you cannot get the 3 letters until you have the work experience. So what's the rush? So there is a trade-off here. When you're 21, 22, 23, you may not have a job and you may have lots of time to study. However, what you're studying to you is abstract because you have no real connection with the finance world. So as you're studying it, you sort of just got to take my word for it or the book's word for it. This is actually what happens in finance without having any frame of reference or without fully understanding how it's done in the real world, which may be challenging sometimes because You may have to memorize your way through things because you've never seen it before. You've never seen an interest rate swap. You've never engaged in any kind of portfolio management with hedging or changing the beta or any immunization. It can be a little bit challenging trying to figure out, well, what does this mean in a concrete way when for you it's so abstract? But you've got lots of time to study. Once you have a job and you're working in the industry, going through level 3, you can start to connect things to the world. Go, I am familiar with this. I see how this works. And so it's easier for you to learn because you are familiar with it. You've worked with it, but you have less time to study because you have a job. So, there are trade-offs, right? I'm unsure of your statement, considered to be bad and also frowned upon. Where is it considered bad? Who frowns upon it? Where did you get this information? Is this something you heard somewhere? Is it something that's generally known in your industry that you've heard it as you're going through level 1 and level 2? Is it something from your CFA society? Do current CFAs tell you, oh, this is not a good thing? Or did somebody who didn't want to do their level 3 at 22 simply just say, well, it's frowned upon? Looking for a reason why. Where did you hear that? Because this is the first I'm hearing of it. I think it's okay to do level 1 without any real world experience because it's mostly declarative knowledge. Level 2, I think, is important, especially for the analyst side, because you're going to have to learn the valuation techniques of different asset classes. Level 3 attempts to be a little bit more real world. So I think it is important to have some real world experience. And again, you can't get the 3 letters until you get the job experience. So, overall, what's the rush, right? I'm in a tech stock. I have a large unrealized gain. I want to hold the stock long-term and protect against a downturn in the short term. Oh, that's looking like, oh, I see. In the short term. Should I buy puts direct on the stock? It's a 3 beta. The stock isn't in an index, but would puts on NASDAQ be more optimal? I believe the valuation is too rich, but don't want to suffer the tax. Insurance costs money. So insurance is just going to lower your returns. So you can insure it every single month from here to eternity, and you can have the insurance premiums eat away your gain. Every time you buy a put, you lose money. You're going to lose the money on the put. You're going to have a capital loss. When you eventually sell it, if it doesn't go down on you, when you eventually sell it, you'll have a capital gain that you can use all the capital losses to offset. But what's the point of earning nothing just to avoid paying tax, right? So what I would say is take a little bit off. Take a little bit off. You're never going to avoid taxes. So at the end of the year, have a look at what your tax situation is in terms of your capital gains or your capital losses. Let's say you get to the end of the year and you're sitting on $2,000 of capital losses. Well, then lighten up your position and take some capital gains. Or you may have stocks in your portfolio where you go, these are never going to recover. And you're willing to take a loss and maybe you'll lose $1,000 on it. Then sell enough of the one with the large capital gain to equal 1,000 in capital gains, and they offset each other. So you can use rather than buying puts. See, when you buy a put has negative delta. So if you have 100 delta and you buy a put at 20 delta, you really only have 80 delta left. Why not just sell 20 shares, right? Why pay to protect your shares? Why keep paying to protect them when you could just sell 20? And if it drops, you can re-add the 20 at a lower price. You can't avoid taxes. At some point, you have to pay them. You can delay them, but you can bleed it out slowly over time. You don't have to take it all right away. At face value, it seems as though they are long did I lose something here? Who are they? They are long utilities for slowdown contraction, yet hedging the probability of potential exogenous tech advancements pushing GDP above trend. Okay, I have no idea where you just sort of jumped into the middle of a sentence here. Pushing the market into a recovery phase with both trailing 6-month GDP, PCE numbers trending down. Trailing 6 month GDP trailing down. FOMC September. FOMC's SEP projecting for GDP to be below trend. How can we determine if the slowdown phase of the business cycle is leading into a recovery? Okay, so you're just asking how can we determine what the future is going to be? You can't. All you can do is form an informed opinion and make your investment strategy consistent with your informed opinion. And maybe be diversified across that opinion. Maybe say, okay, well, 60% of my portfolio will be my informed opinion. The other 40% will be maybe the consensus opinion, which you may or may not agree with. But I do get that question a lot, is how can we tell if a stock is going up? How can we tell if the economy is going to get better or get worse? You can't. You can't. Nobody knows the future. Not because it's unpredictable. It's simply because it's unknowable. It hasn't happened yet. And you could take actions today, and if you are a significant enough person, you can create within people a motivation to act a certain way, thereby creating a future that you wanted to bring about anyways, right? So people with huge followings that have influence can get people to act in a way that, if they had a prediction, sort of makes it come true. Precisely because the future is unknowable. It's not that it's unknown, and it's not as if there is some way in which we can come to know the future. It is inherently unknowable, period. End of story. So how can you know? You can't. It's that simple. Now, there's an important conclusion in that. Because it's unknowable. Actually, let me turn on the light here. Because it's going to get dark, and I think we got a better view with the light. Because it's unknowable, you can do this. And lots of funds do this, is they simply take predicting out of the equation. So they'll say things like, we're not in the business of predicting GDP. We're not in the business of predicting what the Fed will do. We're not in the business of doing that, especially if they're bottom-up stock pickers. What they try to do is they try to find stocks that will perform well regardless of what environment they have, which usually means that they're buying stocks that either are less sensitive to the business cycle, like healthcare or biotech, or buying stocks that are valued so low that even if there was a recession, they're already so inexpensive to begin with. So some people take it completely out of the picture because it cannot be done. Why bother? One of the things I've learned about myself is if you look at my when I first started, my success ratio was rather low, around 50%, which is sort of low. If you're 50%, you're a coin toss, really, and a coin toss. If you're as good as a coin toss, then it's not really you. You could just toss a coin. But when you start dissecting, okay, well, where did I go wrong? What did I do? So you look at all your type 1, type 2 errors. Your type 1 errors is you did something you shouldn't have done, right? And your type 2 errors, you didn't do something you should have done. So selling a stock when it goes down, for example, you've done something. And then to watch it go up again, that had you just sat still, you would have been okay. Well, that's an error. When I did that, I found that a couple of things. Number one is when I lost, it was because I did something I didn't understand. I listened to something and I said, that sounds reasonable. And I didn't check for myself. I just went ahead and did something. Number two, my timing. My timing absolutely sucked, but my picks were pretty good. So in time, I noticed that I'm early. You know, I see something and I can see the connections, and I tend to be a little early. And I mistake being early and the stock moving the wrong way as I've made a mistake, as opposed to, well, I'm just early. This is an opportunity for me to stick with my conviction and add more. When I decided to take timing out of the picture, my hit ratio started going up. My hit ratio now is about, on the low side, I'd say 90% of my picks work out if I take time out of the equation. So I do. I don't worry about time. And if I'm in something and it starts to go down, I wait. And how do I get through that? Because I have been asked that. How do you deal with positions moving against you? Is you don't break your rules. You don't make any one position so big that you can't sleep at night. So if you have a $10,000 portfolio and you put it all in one stock, um, you can ride the wave. You can, if it goes down, you're okay. If it goes up, you're okay. But if you have $10,000 and you use margin and you put $20,000 in that stock, you have to be right. You have to be right because you've given yourself no room to be wrong, which means you must be right. You don't sleep well at night. You can't suffer. Every penny down is painful, and then you got to give up. You got to puke. I've had enough. Keep your position small so that no one position can take you down, right? And have patience and understand that just because you did something does not mean the rest of the market's going to agree with you today. If you've done your homework and you're in something that's good, something at a decent value, the market will come to see it at some point. You just need to have patience. And if your positions are small enough, then when they move against you, it's not going to knock you out of the market. Now, when the whole market moves, then all your positions are going to move. It really doesn't help you there. There, you have to have the fortitude to understand that these things happen. And today is not your day. Maybe this week is not your week. As long as you're not leveraged, as long as you don't have margin that's going to kill you, turn off your computer and go away. These things always turn around, no matter how dark the day looks. They always turn around. The market overreacts on both sides all the time. When you understand that the market overreacts, so you have GDP that has a certain cycle, right? GDP goes up, GDP goes down. Because of operating leverage and financial leverage, companies' earnings cycle more than GDP. Okay, but stock prices cycle way more than the volatility in earnings. How is that possible? Right? So there's a behavioral component to the valuation, not just some objective fundamental value of these are the cash flows, these are the discount rates, here we go. There is some fear and some greed that pushes valuations too high or too low. I'll play there. That's a behavioral bias that I'll play with. So I take time out of the equation. And this is what some funds do when it comes to the future, because it is unknowable. They say that we have no advantage there. Nobody has an advantage. So why should we even bring it into our investment thesis? Long answer for a short question. You're never going to know. You're never going to know. Okay. That was a question that sort of just jumped right into the middle there, but we got it. Can you walk through a replication of an FRA, a forward rate agreement? You either buy it or sell it. It's a single security. It's not even security. It's just a derivative for a 3-month period. That's all it is. You can do it in a futures market. You have SOFR futures. You can go long or short to protect, a short-term interest rate. I'm getting the sides confused. Long FRAs, long cap, short floor. No, it's not. Pay fixed, receive float. No, it's not. An FRA is a single contract for a single deposit or loan that you're hedging the interest rate against. Caps and floors are for a longer period of time. Same with a pay fixed, receive floating. Now, if you did a series of FRAs, then yeah, you could replicate a cap, and you could. Well, the long cap and short floor is just a linear payoff, right? It's a synthetic. If you think about each one is a synthetic FRA. And if you have a series of FRAs, it's the same thing. Just think about long, something has to go up, and short, something has to go down, right? So if you are buying an FRA, if you're in the long side of an FRA, you will benefit when the interest rate goes up. So you do that when you want to hedge a deposit. If you want to hedge a loan, a floating rate loan, you would short. You would Yeah, sorry. Yeah, you would go along the FRA for hedging a floating rate loan, because if the interest rate went up, you'd pay more. You would then you would then get more. So it's the opposite for the asset. I got that mixed up. You often say with 30-year horizon, just buy the SPY. Who cares? But when would you consider a student ready to use strategies from the applied series, like adjusting beta exposure? There's probably very little reason why you would. Well, if you're just starting out, how can I answer this question more effectively? Sometimes people say, I'm this age, I want to buy something. What should I buy? And my thinking is, if this is not going to be something that you want to do, if finance is not something you want to do, but you want it to happen to you, then a passive position in the market is probably the better place to be. If this is going to be a career for you, if this is going to be something more than just something you do with your extra money, then yeah, you probably would want to see, how can I do better than a passive position? Are there ways to do better? But you have to love the game, right? If it's just about, I want more money, but you don't love the game, you're not into the analysis, you don't want to dedicate a lot of time to it, you don't want it to become a significant part of your life, then take a passive position and let the experts and the professionals handle it from there. I'm primarily speaking to a CFA audience. Primarily, I'd say that 90%, 80 to 90% of the people who are on this channel, who watch the market outlook, who are in the applied level, are in the CFA space. 80 to 90%. This is a career choice that they're making. And being a career choice, you don't have the luxury of buying SPY for 30 years and forgetting about it. If you're just an investor, you can do that. But if this is going to be the game you want to play, well, how do you actually apply all of those things you see in level 1, 2, and 3, if it's the game you want to play? And CFA falls into two broad categories. You have security analysis and you have asset management. So the portfolio construction, the applied options, that's really heavy on the asset management, whereas the sector studies focuses more on security analysis. You need both. In selecting a portfolio of assets, you got to figure out, well, what am I going to stick in there? So you have to have some expectation of what's going to perform well. So you need some analysis. So this is what the applied level is for somebody who says, this is going to be my career, not just I have extra money and I want to invest it for 30 years. Then some passive indexes or a money manager, although I'm not that pleased with money managers lately, makes a lot of sense. But if this is going to be your career, either you're going to be an analyst in research, or you're going to be an asset manager, and at some point maybe you want an entrepreneurial career that uses some of this asset management experience you have, or the security selection experience that you have. So when I say just buy the SPY, who cares? That's if this is not going to be your life, if it's not going to be your career. The applied level, if you're going to just say, look, I just I don't have a lot of time, my career is the thing that I want to do, I have some extra money, I'm looking for some investment tips. If you got a long-term holding, buy the market. That's the best advice that I can give you, is buy the market. Over the long term, it outperforms almost all active fund managers. Fund managers. I didn't say hedge fund managers now. I said active fund managers. An active fund manager is someone who has a benchmark, who decides that they can beat their benchmark. A hedge fund manager oftentimes has no benchmark. Hedge fund industry is a different thing altogether. But if you're going to be in this industry, then you have ideas of where you want to go. The applied level really is for those who want this to be a more significant part of their life and want to play this game. I've been playing it for a very long time, and I can tell you, if you gave me 250,000. Let's be realistic here. 250,000. I could generate consistently without a lot of risk, a $50,000 income off that. 20% without a lot of risk. I feel that the market for me is just one big giant money printing machine at this point. If there's a day where I say, let me come up with 5, I can do it. I have the capital to get it done, but I know enough to get it done. I can get it done. That doesn't mean I'm going to win on every trade I make, but I can do it. It is just a big money printing machine when you get to that level of experience. But it's not something you're going to do in your 20s, right? So when you first start out, and I've even in the applied level, I have this. When you first start out, I have this video called "The Rings of Risk." Is your first trade should be an ETF. If you're going to be in this market, you should be trading SPY. And then as you get better, you say, well, I can step into the sectors now. So you start playing the sector ETFs because you think you can do better. So what most people do is they buy individual stocks. That's a very risky thing to do because they don't know anything about those stocks. They just hear about them. But if you buy the SPY, and then as you get more experience, you branch out to the sector ETFs, you branch out to the specialized ETFs, then you branch out to the individual stocks. You work your way towards buying the stocks. I think that answered your question. Building permits and starts were all revised up heavily from their initial readout. That contributed to what looks like a big drop. I wonder if the size of these revisions were typical. Okay, I'm lost on that one. In the latest establishment survey, it's again barista and orderly hirings leading medical services, food services. It's been like this for a year, yeah. Overrepresentation of those industries. What gives? I don't know. I don't know what to say on that. I mean, the numbers are the numbers. Manufacturing has had a tough time for a while. Housing has had a tough time for a while. Construction has had a tough time for a while. You have an aging population. It is not surprising that healthcare is going to be a big part of your gains. With an aging population and the baby boomers entering retirement, the need for healthcare is going to increase. That is not surprising. And I don't know if this is global. So I don't know if you go to another country, if you see the demand for healthcare employees increasing the way it is in the US. The US is a very particular market, and I'm not quite sure what to make of it. Although there is something broken, I just don't know what it is that's broken. But if you rank all the countries in terms of medical spending per capita, the US is number one in how much they spend per capita. But if you rank them in terms of health outcomes, it's one of the lowest. So the US is spending far more money per person than almost any other country on healthcare, and is coming up with some of the lowest outcomes in some of the most obvious things that would be easy to fix, like just a couple. For example, the rate of anxiety and depression diagnoses. U.S. is number one on that by a country mile in terms of the proportion of their population that are on medications for those disorders, like off the chart. Type 2 diabetes, pre-diabetes, again, number one off the chart. So it's either something cultural in terms of the diet, the food, the experience of being American, or it's something more sinister. I don't know what it is. But it would not be surprising in an aging population, and especially the US's aging population, that you would have a large demand for healthcare. In knowing this, though, the healthcare ETF, the XLV, is something that would stand up very well in a recession. The establishment survey is, I think, an honest survey because it asks. It's a big survey. It has a very low standard error. It's look, at all measures are broken scales. Okay, all measures are broken scales, but you can still get a lot of information off a broken scale. If you step on that scale every single day, it'll give you a trend on your weight. It may not give you the exact weight, but it'll give you a trend on your weight. It's a survey, so it's going to be as good as any other survey that has a large N, and it has a large N. A business will say, here's the numbers. Here are my numbers. They don't have to identify anything on that. They're just answering a survey. Other types of requirements from employers for reporting employment will be affected by the level of undocumented workers they have. They'd be less willing in those particular situations to be honest about how many workers they have, because they're undocumented. They'd be unwilling to provide the names of those people or identify those people. So the establishment survey, for as much criticism as it's been getting, I don't know that I would move away from that one. Love to know your thoughts. And here's the thing. What it tells us is how many jobs are being created on average. It's the middle of a distribution. So when we say on average, we truly mean on average, which tells us the amount of aggregate demand that we can expect. More people who are hired, you'll have increases in aggregate demand. When we look at the C component of GDP, we don't see any reason to disbelieve the establishment survey numbers, right? It's not as if it's, the C component is 0.2, 0.3. You say, well, we get GDP growth of 3%. The consumer's only 0.2. It's not like that. The consumer is the big part of it. So it is consistent. If you send people home, especially in the US, because of the high marginal propensity to consume, if you send them home with paychecks, they will spend it. And spend it they do. And it shows up in the numbers. You wouldn't have the numbers you have. You wouldn't have the data that you have in other areas if you didn't have that level of aggregate demand. So I don't see any reason to disbelieve the numbers. Thoughts on synthetics versus long leap calls? Deep in the money for tax efficient long passive exposure. One could grab IYR 75 strike calls a year out every January with great liquidity. Okay, so options are priced on a forward curve, right? It's not as if a stock is at $95 and if you go out to $95, a year from now, it's got 50 delta. It's not a straight line where they're all centered around the current price. They're priced on a forward curve. The higher the interest rate, the higher the forward curve, which means the further out you go, you are paying what interest would be on a loan if you borrowed money to buy 100 shares and you paid that back. What would the interest be on that? That will be in the price of the option. Offsetting that will be the dividend. So let's say that you find a stock that has, let's say that you're looking at January, just to give you an idea of what you are giving up. IYR, I'd probably, if you're looking at the 75s, I would say that the amount that you're paying from the 75 to where the stock price is almost that number. It would be surprising if it were $5 more, because the dividend yield will offset the interest expense. And it'll give you the illusion that I'm not really paying a lot for this. But keep in mind that IYR is going to pay a dividend. What does it pay? I don't know what it pays. Well, let's find out. You're going to buy IYR for this January. Let's just look at that one. I think this is a good exercise to go through, just to be aware of all the hidden numbers are. So let's look at the options. We'll look at the January. We'll look at the last closing price, because that'll be relevant. 2080 to 2120. Let's call it $21 on 75, puts it at 96. IYR is 95.64. So it looks like you're only paying 36-cent premium to get it. You're not. IYR pays a 45-cent dividend, pays $1.80 a year. So you're paying a 44-cent premium plus $1.80. You're paying, this is January, so you probably have two more dividends, 90 cents and 44. You're paying $1.34 for that option, which means it has to go up that much just for you to say I'm indifferent between owning the stock and owning this, because you don't get the dividend. The stock would get the dividend. Keep in mind, every time it pays a dividend, it drops. Every time it pays a dividend, it drops. So it's going to drop, guaranteed. It's going to drop 90 cents because there are two dividends left. So what it's going to do, whether it goes up or down, right away, I know you can start at negative 90 cents because those two dividends will take it down 90 cents. So if you're doing it every January, you're $1.80 behind every single time, right? So I don't know that I'd be too eager at high interest rates to do that. At low interest rates, yeah, I'd be more willing to do that at lower interest rates. But just keep in mind you're giving that up, right? Because if it didn't have the dividend, it would be priced higher on the forward curve. It'd be priced by the present value of the continuously compounded yield on that forward curve. You would be paying a higher price. You have the illusion that you're paying a lower price, but only because you're giving up the dividend. So you are actually paying a high forward rate on that. Leaps are great when interest rates are low. Then you can do, an 85 or 90 delta call as opposed to buying the stock. And I think do quite well on that. But with high interest rates, you're paying for it. Just keep that in mind. What strike price would you sell puts on TLT? 94.95. Good. At this point, I think so. Unless you get a complete reversal in inflation and starts going back up before the September meeting. If there's a reason for the Fed not to cut, 94, 95 might be in jeopardy. But yeah, I think you can move up the puts, and even if they are put to you, cuts are coming. Cuts are coming anyways. You wouldn't have to hold them very long if you didn't want to. XLU trading similarly is selling puts on XLU better than TLT. You'd have to do the math on that to figure out which one has the higher implied volatility and which one has the higher return per dollar invested. XLU still does have company risk in it, whereas TLT only has yield curve risk, right? Can you share the spreadsheet template you use to keep track of your portfolio? I just use what Interactive Brokers gives me. I'm not interested in doing a lot of work. IB gives me everything I need. NRR-UN pays out 100% return of capital. NRR is the Northview. It used to be just what we call a high yield fund, 3-year closed end fund. Now it's a traded security. It seems like getting cash now and paying tax and cap gain way later. Well, yeah. Would you rather it be a dividend and pay dividends on REITs are taxed as interest income? They're taxed at 100% at your marginal rate. There's no benefit from it. I'd rather have return of capital, but you are right. You're just delaying your capital gain, but not selling a stock because it has a large embedded capital gain is the same thing. You're trying to delay it as much as you can, right? Is there a way to estimate when distributions shift from return of capital to interest income? Have a look at the retained earnings. If the retained earnings are negative, then all the dividends will be return of capital. As soon as a company's retained earnings are negative and they keep paying dividends, that is return of capital, because you can only call it a dividend, a distribution of income, if you have positive retained earnings. If you don't, you are actually just returning capital at that point. If they do have positive retained earnings, then you're going to have to do a dive into their 10K. Well, they don't have a 10K, right? They have a 6 F6, F20, F20s and F6s. I think you'd have to do a dive on their annual report to see what their dividend policy is. You said you can achieve growth returns with value stocks and options. The same return with low risk. How do you measure the level of risk of the strategies you use? It's just the level of beta exposure you have. So let's say you're long 100 shares, and you decide to sell a 10 delta call on it because you just don't see a lot of upside. It's a stock that's not really going to move that much. You sell a 10 delta call. You've reduced your exposure from 100 delta to 90 delta. That's risk reduction. And if the stock doesn't go above that strike price, you have enhanced return on lower delta, because you get to keep the premium. You still own the stock. You get the total return of the stock, whatever it is, and you get that extra premium. So you have more return for lower risk. How do I know I have lower risk? Because I sold a 10 delta call on 100 shares, which means net I only have 90 delta, not 100 delta. So I have less exposure to the company, but another stream of income. All right. So, yeah, it's just math. You just look at your, on your portfolio, you can look at the level of dollar delta beta that you have. And you can decide that, well, if I do this or I do that, I can either lower or increase my dollar delta beta of my portfolio, which is your big risk statistic. If you're using stock with different betas and you're combining stock and options, then you're adjusting the amount of money that you have or your position by the delta and by the beta and by the dollar amount that you have. Or did we leave off here? How do you measure Sharpe ratio of your strategies? Once you have a non-normal distribution, if you're combining options in your return series, you'll end up with a non-normal distribution. The Sharpe ratio relies on the assumption of a normal distribution because the denominator is sigma. So if you don't have a non-normal distribution, the Sharpe ratio is going to just be nonsense, right? But you can, IB still reports a Sharpe ratio for me. Hang on a second here. You mentioned creating a forum for Applied Series members. Have you considered creating a Discord channel? No, I've not considered that. But that doesn't stop anybody from doing it themselves. You don't need me to create a Discord channel. I probably wouldn't be active in it, only because I'm trying to figure out how to do things that don't increase the amount of work that I have to do, because I'm one person and I've got a full bandwidth and I want to do more on the applied level, which means I have to find a way to make what I'm doing slightly more efficient. So I don't know that I would do anything that created a more burden for me. Country wants to give $6K to teenagers in poverty after they finish high school, incentivize them to complete their education and enter the labor market. What do you think about this policy? I agree. I agree. This is that's a tax strategy I can get, or a spending strategy I can get behind. If the government wants to cure poverty with education, I agree. But curing poverty with redistribution with no consideration of education, just saying you're in poverty, we're going to take it from these people and give it to you. You're not actually solving the poverty. You're just giving you're just giving somebody who hasn't earned it money from somebody who has earned it. That doesn't solve the problem. It perpetuates the problem because you're going to get stuff. Where's your motivation to do anything? But if it says, here's some money, but you got to do these steps. And these steps have been shown to cure poverty. Great. Because now I know that the spending is for a hand up, not a handout, right? Governments these days are too addicted to handouts to get votes. And you have to move away from handouts to hand ups, right? Open the door and provide incentives for the person to go through the door. If they choose not to go through the door, personal responsibility, man. You are where you are because of choices you made. You had options. We opened up many doors, pulled out many chairs for you. You chose not to. I agree with that. I see nothing wrong with a policy like that. I see everything right with a policy like that. What is your day-to-day like when you're just hanging around St. Kitts? I don't know. What's my day-to-day like? Well, most people would say it's a lot of work. I think it's just a lot of fun. My work is my fun. And then I have a gym downstairs, so I'm in the gym every day. I got a cardio room out back with different cardio machines. I'm in there. That's about it. I get up when I want to get up. I do what I want to do when I want to do it. I don't have responsibilities in the sense that other people have responsibilities with family. I don't have that. Never had that. So I've lived with more liberation in that sense. So it's just a lot of, what is my day like? It's what I want to do when I want to do it, no matter what it is. Curious if you have any thoughts about alternative ways for questions during the live streams. Unless we ask a question before the stream, within a few minutes it begins, it's often too late. Well, I do go through a lot of them as much as I can, but I get what you're saying. So I thought about the memberships channel, and I don't want to do anything that creates more work for me, but I'm already doing this. Memberships channel means that if you're a member, you get to ask questions. Non-members can just listen in. It does have a cost to get done. So, that sort of is a negative on that, is that all I'm doing at that point is introducing a new cost to you. Right now, everything is free and accessible. But at some point, yeah, it's, I don't really get big numbers because this is the questions are, I think, a level of intelligence above what you get in most other places. And because of that, the audience is more intelligent than you would get in other places, and that ends up being fewer people. The further you go into the right tail of the distribution, the smaller the population gets. At some point, I might be 400 people on. The Sunday nights, I'll bounce anywhere from like 120 to 180. Which starts to get a little unmanageable. But at some point, yeah, it will become unmanageable. So there's something on YouTube called memberships where I think it's a monthly fee, and then you have special content only for members. But now that requires me to create more content just for that. Unless it's something simple like $1 a month. Like, I think that's the lowest price that you can put on a membership is $1 or something like that. You put the lowest price on it, so it's insignificant. And then those who pay the $1 can ask questions and nobody else can. I don't know. I don't know. I'm hesitant to introduce anything that has a cost. I know a lot of channels have that, where they have merchandise on the bottom. They have their gifting. They have their ads that go on. They have memberships. I've taken the ads off. I've never really done the merchandising thing. I'm not into the hard sale. I don't know. It's a thought. If it gets to the point where there are simply just way too many questions, then I'd have to do something. Memberships seem like a reasonable thing to do. And then you just put the minimum amount on. I think you could do it I think there's like something for a year that if you say, okay, well, $5 for the year, something small like that, just I think might work. I don't know. But yeah, listen, I am open to suggestions. If you have alternative ways of me doing things, now keep in mind now. So this is kind of like an assignment here. You're a business analyst, and I'm giving you an assignment. You must develop a service or a product that requires no extra time. In other words, that it leverages what I'm already doing, but solves the problem at the same time. You can do that for a business. You can run the show. If you can show them how to deliver the same value and do the same thing more efficiently without any extra resources, that's the brass ring of every organization trying to figure that out. The U.S. yield curve has been rising. Not in the last month. The U.S. yield curve has been falling. Would it be signaling potential inflationary conditions? Not at all. The belief is that we are in a solid period of disinflation, as investors favor. No, maybe you're referring to a different country's yield curve, but certainly not the U.S. It's not been the U.S. experience. Okay, what's the next question here? Signed up for your CFA Level 1 package, great material, targeting the May exam in 2025. Is it realistic to complete levels 2, 3 by the end of 2026? Well, if you're going to complete by the end of 2026, the last level 3 would be August. So you'd have to do level 3 August of 2026, which means you'd have to do level 2 November of 2025. You have your May exam in 2025. That's a short window from level 1 to level 2. That's a short window, which means once you write the level 1 exam, don't wait for your results. Start level 2 right away. Yeah, it's possible. Is it possible for you? I don't know, because I know nothing about you. It's a possible thing to do. I know people have done it before. Level 1, and from going from level 1 to level 2 in a 6-month window. People have done it before. So possible, yes. Possible for you. Only you can answer that. Do you believe natural gas companies and uranium companies could be beneficiary for the AI play in terms of the increased amount of energy that are going to be needed? So for the AI play, you have to believe that this is a multi-year build-out, and you have to believe that this is more than just a passing fad and that there is actually something here. Technology tends to happen in, I guess a good terminology for it would be like a sort of like in a stepwise fashion, a punctuated fashion. You'll progress on incremental innovation, then there'll be something radical, and then it's incremental from there, then it's radical. So we have this jump to the current form of AI we have, which, let's face it, is nowhere near perfect. I've had the misfortune this past week of having to interact with both Bell and Cogeco here in Canada with their AI chatbot garbage. Like, it's just, after a few give and takes, if you have anything that isn't in their already question bank, of most frequently asked questions, it doesn't do a damn thing. It just keeps saying, I'm sorry you're having trouble. I'm not having trouble. you're having trouble, that you end up calling in anyways. This is really on the broad scale, not really ready for prime time, but there'll be innovation coming behind it. Will the innovation happen fast enough to keep the investment going strong enough? Or will it be like the internet where everyone builds out something in this excitement and no one figures out how to use it, and it all falls apart rather quickly before the next wave comes along? So if you believe that it is a long-term build out, then sure. But if you think that, well, this is today, in 2 years it's not going to be the case, then no. But I'd ask a different question. I wouldn't just stick with AI. AI is one aspect of it. I'd say, do you believe the world will be more digital in 5 years than it is today? And do you believe it'll be more digital 5 years after than it is today? Do you believe in autonomous driving future? Do you believe in a 5G future? Do you believe in an EV future, more EVs than there are now, whether it's, all vehicles are hybrid with some form of battery? Do you believe that we'll have more devices than we have now? Do you believe in the Internet of Things? And if you say, well, yeah, all of those take electrons. All of that takes electrons. The moment you require more electrons, you need more capacity. So, yeah, I don't know about natural gas, but you're going way downstream into uranium. It's possible. It depends on the research you've done and what you think the prospects are, and then it's finding a good company that supplies it. I've gone as far as saying the utilities are going to have to increase their assets, and I know that they make money based on the size of their assets. End of story. How they get their power, whether they get their power from solar, from wind, whether they get it from nuclear, whatever the case is, the assets of the utility company are going to have to increase. So I don't have to pick which energy source will be the winner. I just know they need more capacity, period. That's why utilities for me is the first stop, and then I can figure it out from there. But I haven't really thought too much past that. Jim had a great week. I think this momentum will last. I don't know. I mean, I really don't know. I think the Chinese EVs finding their way around the world. China is now the number one, not number one. They beat Japan as being for exporting vehicles. They export more vehicles than Japan does now. And they are taking sales away from other companies, because even if they can't get into the US or they can't get into Europe, they're getting into other countries that these companies would have imported to or exported to anyways. I think Chinese EVs pose more of a threat to Tesla than they do to GM. Because if you're an EV buyer, you have an EV market. If you're not an EV buyer, who the hell cares? Not that they won't pose any threat to GM, but it's a bigger threat to a pure EV maker like Tesla. They're eyeballing Mexico to set up factories in Mexico. It depends on what the market thinks, on what the market believes. Will this be a threat to GM? GM's not doing well in China, but GM has never relied on China for very much anyways. I don't know if it'll last. It'll last as long as the market lasts. How's that? If we expect that the market will be strong this week and hit all-time highs, GM should find its way back up to $47, $48. If the market goes down, GM will go down. Term structure, Canadian dollar. How is it determined? And is it a reliable indicator for future value? First of all, no futures price is an indicator of the future price, of the future spot price. No futures price is a prediction. It's not based on a prediction. It is a mathematical equation. All futures prices, except for VIX, but all futures prices are based on a no arbitrage principle, which is, if there wasn't a futures contract, how much would it be? Well, you borrow money, you buy the underlying, you carry it to the end of the term, you pay back the loan. Whatever that costs, that's the futures price. It has to be, otherwise there'd be arbitrage between the futures and the spot. So the CAD price that you see for any futures contract on CAD is a function of the interest rate differential between the US and Canada. Because it's quoted as $1 equals how much CAD. You have the Canadian interest rate. No, you'd have the US CAD. You have the Canadian over the US interest rate. It's multiplied by the spot rate, and that's what you come up with. It is purely a mathematical result. It is not a prediction of anything. It's just a mathematical result. At level 3, you will learn that some people believe that it is an unbiased predictor of the future spot price. Unbiased, not perfect. Unbiased meaning that it is the middle of a distribution, that whenever we see a futures price, there is a 50% probability it'll be higher, 50% probability it'll be lower, but that the futures price itself does not either over or underestimate what the future spot will be. So all it's saying is it's an unbiased estimator, but it's not saying that that is what it's going to be. Research shows that no, it is a biased estimator. You have that to look forward to at level 3, but it is in no way ever a prediction. It's just a mathematical result of variables we know today. CFA topics have been updated somewhat. In some places more than somewhat. Could we have the option to access your most recent videos for CFA lectures on MM? You do. For someone who has a hard time understanding the other. Oh, no. If there's a video that's being done by one of the other content specialists, it means that I haven't done it. It means they've done it. So what I would have would be dated. It would be the year before. And in some cases, it would be close. And in other cases, it would be completely different. But no, I don't think that it would do you any favors by putting it up there. And when you say you have a hard time understanding, I'm not sure exactly what you mean by hard time understanding. I've listened to them. None of them speak with an accent. They speak in the same English or North American accent that I have. Well, one has a British accent, which makes him, I think, somewhat a little more understandable when you're listening to it. But I don't know, when you say hard time understanding, that could mean almost anything. So if you could express it a little bit better, what you mean by that. But I'd say right off the top, no. How was my weekend? Normal. Normal. There's nothing about my weekend that makes me say, oh my God, let me tell you what happened. Current view on the housing market in the US, is it a bubble? Lots of news. Prices may fall 30 to 40% of current listings if there is no soft landing. Well, I mean, if there's no soft landing, well, 30 to 40%, that's like nationally, I think that would be difficult. Nationally, that would be tough. Regionally, like some cities, some regions that have been overbuilt, could be possible. But nationally would be, I don't see excesses nationally. You may have excesses in some regions. So somebody in a particular city in Florida or Texas may say, you should see all the houses that are available. But somebody in, let's say, I don't know, I'm just going to make up a place here. Let's say Topeka, Kansas might say there's nothing available here. Or in Colorado, one of the other than Denver might say, well, there's nothing available here. So regionally, I think it would be tough to see 30, 40%. I think wherever you're hearing 30, 40% is probably because they need you to read something or they need you to watch something, and it's not really the content that's important to them. It's the fact that you read it, they got a click or they got a view that's important to them. But you're never going to get somebody reading it saying, something more centrist and more reasonable. You got to say excessive stuff these days if anyone's going to listen to you. No. Is it a bubble? I'd be hesitant to call it a bubble. Is it an overvalued asset class in relation to the affordability? I think so. I think it is. But so is education these days. Education is getting to be an overvalued asset class in relation to the earnings potential of a degree. It is really becoming overvalued. But until these things correct, they stay that way, right? So could there be a correction in housing and in education? I think there do. I think it would be healthy. But bubble, I wouldn't say bubble, and I certainly wouldn't say 30 to 40%. What's your hedge against nuclear fallout? If I were 21, I'd be thinking about a hedge. I've had a good life. If there's nuclear fallout, I would probably say, you know what, at my age, there are fewer years ahead than there are behind. I'm good. I don't really have a hedge against nuclear fallout. I'm not a prepper. So, it will be what it will be, and that will be it. And, as you get older, you get more comfortable with your mortality. And, if I were 21 and I got shot, it'd be like, God damn it. But now if I get shot, it'd be like, all right, well, I had a good life. I get a bunch of things in the win column. I did well. I left very little undone. So no hedge. At this point, I'm not going to hedge. Opinion about someone in the 30s trying to leave Canada to move to the US for better economic opportunities in today's economic and political climate. I'm all with you on that one. I agree. I think from an economic growth perspective for an individual, I think the US offers a hell of a lot more opportunity than Canada does. Always has, by the way, always has. But, there's the give and the take, right? Here you get free healthcare if you can actually get free healthcare. I shouldn't say it's free. You actually pay for everybody else's free healthcare, and you get some of it if you can get it. If not, then you pay for everybody's free healthcare, but you don't get any. In the US, you pay for your own, and it's not cheap. So you've got that to keep in mind, right? You also have let's face it, a higher probability of dying by a bullet than you would in Canada. Not that that doesn't happen in Canada, but you got a much higher probability in the US. Still small, but it's still there, right? But as far as future potential goes, having lived on both sides of the border, I can tell you the US is far more creative, far more entrepreneurial, and far more of a risk-taking culture than Canada. In Canada, it's, when you have a thought or an idea saying this is an opportunity, the questions arise of, well, how much can you lose? How much can you lose? In the US, it's different. It's how much can you make? How much can you make? It's a different way of looking at the world. So if you are interested in being all that you can be, then I agree with you. I agree. Could you please tell me why you want to move from Costa Rica to Panama? Residency requirements. You don't have the same residency requirements. My application in Costa Rica has been approved. I just got to go get my Dimex card, which means you go for your picture, you get your Dimex card, you're done. and then you start paying into the CAHA system, which is the healthcare system. You have to have your private health insurance, all that kind of stuff. I don't know if I'm going to do that. I mean, because once you do, then you have a residency requirement, 6 months plus a day. Panama doesn't have that residency requirement. You don't actually have to be there. So I could be 5 months in Canada, 5 months in Colorado. I think a condo somewhere around Telluride would be great for the winter months, and then 1 month in Panama. So, thinking of that. Ideal schedule would be like if you didn't have Applied Series businesses do and you were just investing. Would you read 10Ks every day? Economic? Yeah. All of this is an ecosystem, right? It's not as if, and it all takes time. Like I'm not going to say that I wouldn't be better prepared for the market if I had less to do. But all of it is an ecosystem. It forces you to have to do these things. So the applied level forces me into areas I wouldn't normally go because I have to fill out the content. So it forces me to, do certain videos for certain sectors, research certain industries that I otherwise wouldn't research. So it actually makes me better. If I were unburdened from CFA and from the applied level, the question would be, would I willingly still do that? Or would I stick to one particular region? Would I say, I don't want to do biotech? But with the applied level, at some point, I'm going to have to do a video on the biotech sub-industry. I'm going to have to, because it's there. I got to fill it out at some point. It forces me into there where I normally wouldn't go. And maybe in doing that, it throws something on my radar. It's questionable whether I would have done a telecom video if I didn't have the applied level. Would I even have done a telecom video? And would I ever have discovered, what, AT&T is a little darling here? I mean, given the current price of $16.50, when I did it, it was mid-16s. I thought this is an easy bet to make. It's $19.50 now, so it's up 20% just this year alone from when I started, plus 2 dividends. So you've got a nice return. Plus, if you were selling the puts along the way, you've probably done 30%, maybe 35% on AT&T. AT&T. Who'd have figured that one, right? So by doing these things, it allows me to find things that I normally wouldn't go in. So if you give up one, do you give up something that forces you into something that you normally wouldn't do, but in doing it is beneficial somewhere else? If we did only stuff we liked every day, we might not grow the way we would like to, because sometimes it's the stuff we don't like doing that we do anyways that helps us, improve here and there. Look, go to the gym. No one likes leg day. No one, well, some people do, but leg day is because it's hard. It takes a lot out of you, and your legs will scream. It's brutal. It is the one day I don't look forward to, but I do it. Because it improves my back strength, it improves my leg strength, it improves so much. Like, it's not just that. So by doing things that you don't necessarily want to do, it has benefits in the things that you do want to do. I'm not a big fan of cardio at night, but I do 45 minutes every night before I go to bed. I do sleep better, although the last 3-4 nights I have not been sleeping well, and I don't know why. I keep a Benadryl, little pink Benadryl pill right beside my bed, and I have it right there. And after about 45 minutes of flopping like a fish on shore and not being able to sleep, I pop a Benadryl pill and I'm out. If you can't get to sleep, forget about all that sleeping pills that you can get and all the medication and the Ambiens and all that. Take a Benadryl. Not only will it clear up you all night if you have allergies, but you'll be asleep in like 10 minutes. Boom. Take 2, you'll sleep for 12 hours. It's beautiful. Um, yeah, I think I've answered that question, right? This Kamala Harris floated the policy where she's looking to support first-time home buyers with 25K. I don't agree with that. And price cap on essential. Ugh, I don't agree with that. Could this lead to inflation back above Fed target? Well, if you have price caps, inflation's not going to go up, but supply will go down. Um, the history of wage control, price controls, is a history of restricting supply, and then you create shortages that you think, well, another entrepreneur will step in and fill the shortage. Not with a price cap. Not with a price cap. The best cure for high prices is high prices. That's the best cure for high prices because companies, new companies, competitors will innovate around those high prices. If you want to create innovation in, let's say, water pollution, that you want to, can't we clean up the rivers and lakes? What you do is you put a tax on dumping in rivers and lakes, a very high tax. Companies will innovate around that. They will innovate around that. The best cure for high prices is high prices, period. That once you start poking around in the market, once you start putting your hands on certain things, you're only going to fuck it up. No, a price control has never worked. There is no history of it ever working, ever, ever working. You'll create shortages, easily create shortages. No, I think it's stupid. As far as giving people $25,000 for first-time home buyers, why? Why should the taxpayer support the purchase of a private asset for an individual? Why? Why should you, who is not a first-time home buyer, why should you, with your tax dollars, support that person for their first-time home buying? Why? I don't understand why we would do that. Isn't that your parents' job? Isn't that your job? Why is it the taxpayer's job to suddenly supply you with $25,000 to buy your first home? Uh, it's how's that going to cure anything? What is it that you're actually trying to cure to begin with? How are you going to get that money back? How's that going to be? All you're doing at that point is redistributing. You're redistributing from homeowners to non-homeowners. That's all you're doing. Is you're saying you have a home. How dare you? These people don't have a home. How dare you? We're going to take money from you and we're going to give it to them so that they can have a home just like you. Um, I think it's a dumb policy. Once you start socializing the cost of private assets, right? I want everybody to pay for something that I get the benefit of and only me and only I get the benefit of. I want other people to pay for that. And if you think, well, that's going to increase the amount of people who buy a house, that'll increase employment in the housing sector. Where are you going to hire these people? Right? Where are you going to get that? There was already a problem with hiring people for the housing sector to begin with. Where are these houses? They don't even exist at this point in time. So once you start getting in there and messing around with the economy, you're gonna fuck things up. So I disagree. I completely disagree with that. If you want to provide something, I think what you should do, if you really want to help everybody, is you should provide home builders with zero cost interest on development loans as they develop their properties, on the condition that they develop homes uh, before they're sold. Right now, home builders are only building to a sale. You want to encourage more homes to be built to make them more affordable. As you say to a home builder, if you're willing to build out 50 spec homes in that neighborhood over there, we'll give you a zero cost loan for the next 2 years. and there's supply on the market. That I can see is more reasonable. Then the builder can, because it's got a zero cost loan, could probably sell all those houses for $25,000 less than it normally would, because you didn't have to carry the interest expense for 2 years on the lot, on the building, on you didn't have to carry the expense. You could probably offer it for $25,000 less to any buyer. Why does it have to be a first home time buyer? Well, it could be any buyer, right? So, the other side is if you only offer it to first home time buyers, and let's say it's successful and a whole bunch of houses are built, it will push down the price of all the other houses. So I, as a second time home buyer, would have to sell my house for less, but I'd have to pay the higher price. I wouldn't get $25,000 less on the next one I buy, but you would. Thereby my equity in my home is now subsidizing the equity in your home. I don't think so. If it's a $25,000 discount on a house, it should be for everybody, whether it's first time buyer or not. It should be for everybody or nobody. How is e-signal for charting and day trading? Never used it. If you left Canada because of taxes and you would donate all your wealth later, why wouldn't you start donating now to lower your taxes? Meaning you would donate money now rather than being taxed. That wouldn't change my tax rate. It wouldn't change it at all. You'd pay less. You'd pay less tax, but your tax rate on your income would be the same. So what you're saying is that I will accept an unfair tax, and I will just give money away to get a fair tax. I left because it's unfair. I left because it's unfair, and it's not going to get any better. I'm telling you right now, if you're in the UK, if you're in the US, if you're in Canada, if you're in any Western country where governments have taken on massive amounts of debt to pay for the pandemic, and you have money, you don't get to keep that. If you have capital, you don't get to keep that. They will come after you because there's no one else to go after, and they got to pay it off. Every single penny a government spends must come from you at some point somewhere. 50% of the population don't pay taxes, which means the other 50% pay for the 100%. The top 10% pay for 43%. Those are the numbers in North America. Those are the numbers. The top 10% pay 43% of all the income tax. The top 10% pay 43%. They pay 4.3 times their fair share. Get ready to pay 5 times. Get ready to pay 6 times, because that has to be paid off. And if you've got capital, if you've got equity, they're going to come after it somewhere. Have you heard the dumb thing the Trudeau government wants to do? They want to, when you own your primary residence and you sell it, there is no capital gain. It's yours. Well, they want to change that so that there is a capital gains tax. And the longer you hold it, the lower the tax goes, but you'll pay 5%. Why? Because you got it. These people don't, but you got it, and we got to get it from you somewhere, right? And they're going to get it from you somewhere. So I left because you can't make decisions for what's going on today. You must make decisions for what you think is going to happen in the future. That's one of the basic principles of finance, is you buy the future, not the past. You don't invest for where the yield curve is today. You invest for where you think it's going to be tomorrow. You don't flee a country because of tax rates today. You flee a country because of where you think tax rates are going. They're going higher. It's 53.5% as it is right now. The capital gains inclusion rate just went to 66% from 50%, even though the majority of the country is against it. Up it went, up it went, up it went. It won't stop there. If the Trudeau Singh government gets another term, there will be a wealth tax. There will be a higher top tax rate. There will be more taxation for redistribution. If you're successful, your tax rates are going up. Period. That's why I left, because it's not going to stop. It's not going to stop. It's not going to stop. And at some point, fairness matters. I'm not being treated fairly. I'm not being treated fairly, and enough is enough. That's why I left. But you're right. Here's where I could do better, by the way. And you know, uh, I think if I did follow that path, it's what I would do. I can give it. I can give it away to charity, but you don't get the same tax benefit that you do if you invest in a startup. So if I put $100,000 into a startup, it might hit and I do very well. It's not going to help my taxes, but I'll do very well because I've turned my 100 into so much more. But if it doesn't go anywhere and I lose, that's a full $100,000 write-off. When I give it to a charity, I don't get a full $100,000 write-off. I get less. Dollar for dollar, it's better to lose it in a business than it is to give it to a charity. If I give it to a charity, I got to give it to a charity next year. So you give to community care, for example, they help feed the poor. I've been to community care a couple of times in bringing my checks down there to say, here you go. And I see the same people. They don't actually cure the problem. They feed the problem. And they feed the same problem again and again and again and again. They never actually solve the problem. But if I give it to 100,000 to a startup and they hit and they create employment and they hire more people, am I not solving a whole bunch of problems? Am I not creating an extremely large tax base off that success? Is that not better for society than giving $100,000 to feed people for a while? Isn't that better? It's better for me as a taxpayer because I get a better write-off. If I lose the 100,000 in the business that I invest in, I gave 100,000 to charity. I don't get a return on that. That's just gone. If I put it in a business, well, that's just gone. I get a better write-off if it's gone that way. But if that business hits, if it's one of the 20 you invest in that hit, you create much more for society than donating money to charity. So I think that if I did follow that route, I would become an extremely large angel investor, as I would look for $100,000, $200,000, $300,000 investments in businesses in the education space because I know that space, and I would do that. And I get a better tax advantage from that than I would from donating to charity. Right? I'd do better with that. If I really wanted to avoid paying taxes altogether, I'd go into real estate, direct investment in real estate. My depreciation tax shield for the first 5 years would nullify any net operating income I have. I can even operate at a loss. And then after 5 years, sell it and then move it into another one. I get a carried interest on that. I don't have to pay any capital gains. As long as I continue, I can defer taxes for the rest of my life if I really wanted to. Or the government could just have a fair tax and treat people fairly and say, look, this is an upper tax rate. Anything above this is kind of ridiculous. Kind of means we are out of ideas and we're not doing our job. If we're charging people 53%, 54%, which is where I was, 53, 54%, the majority, I was a minority shareholder in my own life. Okay, a minority shareholder in my own life. At some point, it's unfair. So if you had a government that just said, look, at some point it's unfair. It's just, we're a government for everybody, not just the unsuccessful, but for everybody. We can't keep punishing this group of people who have really done the right things, who are the major investors in this economy, who are the major job creators. We can't keep punishing them. If they did that, 40% top tax rate, and beyond that, we'll figure it out. We'll have to make the tough decisions. I would never have left. I would have thought, well, that's a fair tax rate. You're treating me fairly. But every year you come back pointing at my socioeconomic class. They're not paying their fair share. We're just asking them to pay a little bit more. If they paid a little bit more, we could solve these problems that never get solved, by the way. They never get solved. But next year, we're just asking them to pay a little bit more. Next year, we're just asking them to pay a little bit more. It's unfair. They don't pay their fair share. And every year they keep coming back saying the same thing, the same thing, the same thing. If you're going to spit on me every year and you're going to treat me unfairly, why the hell would I stay? Why the hell would anybody stay? That's why I left. Yeah. Could you please tell me why you did that? What do you think about the average level 3, the August level 3 exam? Uh, it was very hard for me. Well, I don't write the exam, so I can't answer that. Curious, given your success in managing your money, do you ever think about starting a hedge fund managing outside money? I don't want to do that. I don't want to do that at all because you right now I can do what I want, how I want, when I want. Period. If I don't want to do anything, I don't have to do anything. Warren Buffett's sitting on a big pile of cash. Well, you know what? So am I. I think for different reasons, but I'm sitting on a whole pile of cash because I don't see anything compelling at this point that I would want to be fully invested, especially when I'm getting 5.5% on US dollars for just hanging around. There's nothing compelling. With a fund, it's Red Queen effect, right? The Red Queen effect is you got to run just to stay in place. So you have to perform. You got to find something. The gun is to your head all the time. Not only that, you need marketing, right? The cost of getting this stuff done. You need legal. You need marketing. You need a team. It's a whole business. It's a business I don't want to get involved in. I don't want to run that kind of business. Strategy, great. If there was somebody out there that says we just want some strategy input, great. I got no problem with that. But being part of it, I have no desire. To take on that kind of workload and that kind of the not that you have a benchmark per se, but the benchmark of everybody else because you have a peer group now. I mean, that's really your benchmark, right? Is your peer group. I am not interested in putting that kind of stress on my life. And I don't really have any inclination in me to be a billionaire. I could never use what I have now. I'm not materialistic. I like comfort. I like living a certain lifestyle, but I drive, how old is it now? It's going to be 11 years old this November. I drive a pickup truck. Tried to buy a new one. Insurance was unfair, didn't, but I'm not a materialistic person. So I'd never spend everything I have. So the idea of starting these funds, it's less about the love of what you do and more about the love of wealth and the love of money. That's not a pull for me at this point. It's just not a pull. So no, I don't think I would do that. How does TLT move? Is the only way to lose if they start hiking? TLT moves in relation to the long end of the curve. It has a duration of 16.8. It's mostly in 25 to 30-year treasuries. So you got to look at the 20 to 30-year segment of the yield curve. And if that goes up, TLT goes down. If that goes down, TLT goes up. I like the thesis for XLU, but it has pretty good run up year to date. What should I look for accurately put a value on it? Oh, well, it's a portfolio of individual stocks. So XLU is fairly valued because XLU is an ETF that will have a value equal to the weighted market cap of all of its constituents. So it's not like you can do a valuation on XLU. XLU is probably trading at its net asset value almost all the time. So in other words, you're buying XLU at its fair value being the weights of the components within XLU. The question then is, how do I tell if the components are fairly valued? Utilities have a almost guaranteed return on equity. That's the point of calling them a utility. They're regulated to get that return. So most of the time they are fairly valued or close to fairly valued. Utilities outperform in contractions all the time. 100% track record of outperforming, and that's the only time they outperform. But we're entering a very particular time where utility assets have to increase faster, at a rate faster than what GDP would have to increase at, which means I think utilities have a long way to go. But at almost any given time, I think they are fairly valued. Now, if they earn too much money, well, then the regulators step in and say, okay, well, depending on what they earn, whether they earn too much or too less, it creates things on their balance sheet called regulatory assets and regulatory liabilities. Those have to balance out at some point in the future. So it's hard to say they're overvalued or utilities are becoming overvalued. I think it would be hard to say that in any excessive sense, like we can say, Tesla's overvalued. You'd never get a multiple like that on a utility. So, heard that at local Costco, about 20% of the shoppers walking in the store were using someone else's card. Yeah, Costco is trying some experiments to shut that down. In Canada, they've identified, I think it's 4 stores that they're doing it at. And it's people are using other people's cards. I know when I go to Costco, I just show the card that says Costco. The girl standing over there says, okay, go ahead. When I go up to the cash to pay, you just hold your card up with the barcode and they scan it and they keep going. So they don't really check it. Here in Costa Rica, you go to PriceSmart, they check your card and they ask you for ID. You have to show a driver's license or something. You got to show ID that you are the person. I sent somebody to PriceSmart with my PriceSmart card because I figured, well, nobody checks. Lost my card. I had to go in and get my card. I had to go in and stand in line, and nothing happens fast in Costa Rica. If you got to go stand in a line, you need to take the day off. Even if there's only 2 people in front of you, that's a 4-hour wait. Nothing happens fast. Nothing happens fast in Costa Rica. So yeah, it took a bunch of time to stand in line, and you just stand there and think, how long does it take? Like, how long does this take? And it took some time. But here they don't even check. So because they don't even check, you get used to them not checking. You need to send somebody down there. You send somebody down there. I'd say of the people who are using other people's cards, chances are most of them are family members. Where one person says, I can't go, well, take my card and go. It's family members or somebody you're living with in the same building or not the same building, but the same unit, the same apartment, whatever the case is. But they do want to crack down on that. I have a partner, my sis and her spouse. Oh, partner. Is working in the company as purchase manager for the last 2 years. We got an offer from a competitor merger into one. My sister's forcing me to dilute to 1/3 of share. Is there more to that? Oh, I don't want to do it. But he made relations. I don't want to do it, but he made relations during the work. I gave him that position because he liked it. Now it's reversed. I think is okay. I can't follow that. I had a rule very early when I started in business is never ever do business with family and friends, ever, because you can never make the tough decision because there's always something else involved. Never ever do business with family and friends. If you got a business and your friends say, hey, you're providing this, I'll buy that. No. Look, here's a name of somebody who can help you out, just because it's an implied lifetime customer service line, 24 hours a day, or you have to make decisions that are suboptimal on a business level because you have family involved, right? I just don't think it's wise. But you are where you are, so you're going to have to deal with that. Yeah. I don't know if you have any agreements in place. If you do, like you have an offer, two people want to sell. Do you have a clause in there that allows you to take them out of the picture and not merge? I don't know. Last week, did you say inflation was going higher? No, I didn't say inflation was going higher. I said there's evidence to suggest that CPI may come in higher. What data did you use? Manheim, there was a Manheim used car index, and then there was the services paid component in the ISM services that came in higher. In hindsight, PPI and CPI were better than expected. PPI was. CPI, I think, came in pretty much as expected. I don't know that I would say that it was better than expected. Pretty much as expected. CPI was okay. It was If you look at it in a longer term perspective, I mean, you had CPI coming down, and then the last 3 months you had negative, and then you had zero. Now you have positive. It has been going up the last 3 months now. But CPI has been doing this, right? Going lower. Each bounce is lower, but it doesn't go in a straight line. It is on an upward bounce right now. So it's not to the point where I would say, oh, it's going up, but it's not to the point where I would say we should celebrate this number. It's evidence that it's going down. It's like, well, it's not solid evidence that it's going down. What is evidence inside the CPI is that the supercore has been negative now for 3 months. That's deflation in everything except food, energy, and housing. That 3 months of deflation, that's enough. I think that's enough to justify a cut. I think they should have cut already, but they didn't. So September, I can't see a zero unless the August CPI that we get in September comes in at like 0.5 or 0.6, then that's gone. And I think so is the economy at that point. Out of these two, which is a better option, going to Western University for Masters of Financial Economics or Waterloo for Masters in Quantitative? That is a smart person's problem. Right? It's one of those high-class problems to have, is that would you go to Western for this, or would you go to Waterloo for that? It's a tough call. That is a tough call. I think I would have to think that one through for quite some time. But you've got two good choices there. I think you could flip a coin and be happy either way. If you're thinking about campus lifestyle, Western has a beautiful campus, and it's a nice city. But I mean, you can't make a decision based on that, but it is a nice city. Good problem to have. Good for you. It's a good problem to have. Both good schools, and yeah, that's a tough one. If we assume there's a bull run, when do you reduce exposure to beta, since markets can stay at high multiples? When do you reduce some high multiples for many years, which signals, and when do you notice an actual slowdown? Well, you don't. And just because you think the data is saying something doesn't mean you're right. I was in the recession camp last year saying you can't move rates this high without breaking stuff. You can't. Well, apparently you can. Apparently you can. Was wrong about that. So who knows, right? All you can do is do what's right for you, right? Do what you feel comfortable doing, and you have to think about the outcomes. If I do this and the market turns down, can I live with this? Yes, then do it, right? For me, selling puts on GM was a no-brainer. After I saw their earnings, the raised guidance, Listen to the conference call, went to 48, 47, 46. This is a no-brainer, right? I'll do it. You just have to be comfortable with what you want to do. Now, if you're chasing market performance, then yeah, it's a matter of when do you get off this bandwagon, if that's what you're doing. And going back to the hedge fund question, that is what you have to do. You have to chase market performance. You got to dance when the music is on. You don't get to step to the side. In which case, then you have to start thinking about, well, how do you spot these things, and what signals do you pay attention to? It depends, and I guess it also depends on what industry you're in, and what skill set you have in hedging market risk. You may have great skills in hedging market risk, in which case you say, why should I be anything but 100% long? I know how to hedge out. I assume there are a lot of false positives of minor dips before the bull run continues. Yeah. Is there a discount for level 2 package for people in the third world? No. We believe that based on what you're getting, that based on the price compared to the other large providers, the other significant providers, and it's a small group, that we are already discounted compared to them. So I'm sorry on that one. No. It's a bit expensive in my currency. Then you don't need the whole level. I mean, do you really need ethics? You've already been through ethics once. I mean, I think you got that. Do you need every single section, or are there some sections where you could say, okay, well, I can do this one on my own. I really need help with quant and fixed income and derivatives. Just buy those sections. Just buy those sections. If you decide later on to buy the full level, whatever you paid for the sections comes off the price. You never pay more by buying the sections individually. You never pay more. How to tackle this? I finally know, but I have. Oh, okay, that was up there. You mentioned that it takes years to become an expert analyst in the industry. Yep. Will AI not soon become an expert in all industries? Nope. Thereby replace financial analysts? Nope. No, because it'll never replace intuition. It'll never replace the only experience AI can have is linear experience. Nonlinear experience will lead to hallucinations, because it will not recognize when it's that far off of reality. It can't, because it has no consciousness. It has no essence. It's just code. Like, it's just code. Code doesn't make up its mind. Code just executes based on probabilities. Even these deep neural nets, you think, well, they're making up their minds about something. No, they're not. They're running an algorithm that places probabilities on certain things. Now, some code is better at determining that's a cat and that's not a dog. When an image is on a screen, some algorithms are better because some programs are written better. But in the end, if you give me the code and you give me the input, I should be able to tell you with absolute precision what the output will be if I trace it through. I should be able to tell you what the output will be. But if I give a human all the inputs, I cannot predict with accuracy, exact accuracy, what that person's output will be. I can't. So if that person has a lot of experience with a certain topic, in their head, they can have 5-6 options available that they can analyze very quickly, faster than any computer can analyze. And intuition means a lot. No, I don't think. I think they'll be a great tool, but not a replacement. This idea of replacing intelligence. Keep in mind the stress here is on the word artificial. It's not intelligence. It's just another name. In many cases, it is another name for regression, for predictive analytics, which we've had for years and years and years. So there's predictive AI and there's generative AI. Predictive AI is just nothing but regression. You can create a regression equation that's then used to predict something. There's AI. You can call it AI. That's all it is. Generative AI takes something and it tries to generate something off of that with the code that allows it to generate something. And the idea is, well, it's generative, it's new. It's an extrapolation from the data based on probabilities. I have a computer science degree. I mean, I got it years ago, but I have gone through it. I understand code. Code does not make up its mind. Code has no mind. It has no mind. It is simply just code. There's better code, there's more elegant code, and there's ugly code. It just executes. That's all it does, is it just executes. So no, this idea that it's going to replace a lot of people that do non-routine cognitive, I'm not sold on that. I haven't seen anything that makes me say, whoa, boy, other than routine stuff, I haven't seen anything that causes me grief in that. What is your opinion for the, somebody asked that. I have no opinion on the exam. I don't take them. I'm sitting for level 1 next Saturday. I'm hitting 70% consistently on my mocks, trying to memorize formulas now. Anything else to try to score more on exam day? I'd say at this point, there's very little on strategy I would change. I'd say just lean into it. Just lean into it. Now's not the time to back off, right? What are your thoughts on hydrogen power compared to electric? I don't have any thoughts on that. I've not looked into hydrogen in any degree, so I don't have a thought on that. By the way, I should warn, the power here has flickered a couple of times this weekend, where everything goes off and it turns right back on again. Like it just flickers, and it's raining outside now, so there's a high probability it could happen again. I may lose you. If that happens, then that'll be the end. I won't try to log back on because we're already at the 2-hour mark. But if it just disappears, I've given you a warning here. Niagara region, it happens a lot. More than it should, but it happens a lot. If we bet on a Harris election win, I think there's a good thesis for consumer discretionary. My assumption is that consumers will be more willing to spend, assuming they'll get freebies. I don't know. I don't know that I would get to that conclusion. And the idea that they're going to get freebies, that's, somebody's got to pay for that shit, right? Somebody somewhere's got to pay for that stuff. So if you're talking about higher corporate taxes to pay for the freebies, market goes down, right? Just wondering if someone wants to contribute to the financial modeling modules, who should they contact? Me? You should contact me directly. Looking forward to price control. Price controls, that's stupid. It's dumb. How do you recommend to handle or implement stop losses? Well, I don't know that I have a recommendation to implement that. Where would you be uncomfortable? And then that's where you would put your stop loss. If you buy something at $30 and you say, well, if it drops to 29, I'm a little uncomfortable, then that's where you would put your stop loss. I'd use a trailing stop loss, so that if it goes to 31, your stop loss moves to 30, so that the most you lose is $1, that you decide that, look, if it goes to 40, I don't want it to go back to 29. If it goes to 40, I want to be out at 39. Use a trailing stop loss. How do you, okay, the video and sound is good today. Okay, the sound is good, isn't it? It is. This is the microphone that I use. I don't know if you can see it. It's, well, let me see if I can. No, I can't extend it any further. It's a Snowball. It's a blue Snowball. It's the microphone I use. It's the same microphone I use at the same distance away from me to do the market outlooks. On the market outlooks, I can't hear. The sound's too low. I can't hear. The sound's too. I'm tired of that. There's nothing more I can do, because I use the same microphone. Then I import that video into Final Cut Pro, and I raise the decibel level in Final Cut Pro. If you can't hear it, it's you. It's you. Because I put the video up. I got a couple of complaints today on the video. Can't hear it, can't hear it. I put it up and I put another YouTube video up right beside it. And I go back and forth, back and forth, back and forth. Same level. It's this. I don't hear what you hear. So for anyone on the market outlook that says, I can't hear, here's what I want you to do. Don't tell me you can't hear it. Tell me what country you're in, who your internet provider is, and what browser you're using. I'm willing to bet the people who can't hear all have the same problem. I'm willing to bet that it's a very specific problem. Either it's the type of browser, the combination of browser and country or browser and service provider that you're using, but there's just simply no way. I have ears. I'm right here. I can put both videos up, somebody else's YouTube video, mine, without touching the volume key. Play, 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 play. They sound the same to me. So if you can hear what I'm saying right now, it's the same microphone. It's the same setup. It's the same distance. It's you. Or more likely, since it gets me upset when people do it, that there's a couple of people out there saying, I'm going to poke the bear. I'm going to push some buttons on this guy. Watch him. He freaks out every time. Probably more of that than anything. How would you deal with homelessness in USA and Canada? Well, I think the first thing is to ask the question, why is there homelessness? I mean, you can't fix something unless you know why the problem exists. I would want to know why there's homelessness, and then I'd want to know the demographics. It's not so much the demographics, but maybe the socioeconomic conditions of those who are homeless. You know, are they a mix of high school dropouts, high school plumbers, electricians, university graduates? Is it a mix of a whole bunch of people? That tells me that it's a problem that doesn't have a specific subset of people. Maybe it goes beyond personal responsibility to something else. Maybe there's some other broken thing in the system. But if I look at them and I say, okay, these are mostly high school dropouts and only high school graduates, minimum wage workers at best. I don't find any skilled trades in here. I don't find any university degrees in here. I find none of that in there. I know that they all qualify for welfare. How many people are on welfare? None. Why not? Why? It's there. It's there. Go ahead and take it. And if there are work requirements with welfare, okay, I'm starting to get a picture now. Most people, not all. So for those of you who say, oh, no, I know somebody, blah, 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 that's anecdotal. Most people are where they are because of the decisions that they themselves have made in life. You get to where you are predominantly not because people push you around, but because of decisions you make. Have people pushed you around in life? Yeah, people have pushed me around in life, you know. But to have everybody push you around in life, that's very, very rare. Not to say that there are some people who are where they are through no fault of their own, but for that you have to go to specific countries. In Canada, in the US, if you're living on the street, I'm going to say there's a 98% chance that it's your fault, that you have made suboptimal decisions in your life, and that you, when faced with the opportunity to make a better decision, have never taken that opportunity. You can push back saying, oh, but there's a lot of addiction. Well, who forced them to get addicted? Who pumped their veins full of drugs? They made the decision to start. I'm sorry. But at some point, you can't solve a problem unless you actually say what the cause of the problem is. And sometimes it is, I shouldn't say sometimes, in most cases, it is rational to start with the individual. Why are you here? What have you done? Let's examine your choices. If you can rule out personal responsibility, then we have a problem that needs to be solved. And I'm right there. Well, sure, let's solve this problem because it'll help everybody out. But if you can't rule out personal responsibility, you have to start there. You can't make society responsible for everybody's bad choices, right? At some point, your bad choices are your bad choices, and you have to live with them. In Canada, you have free education up to grade 12. Can't afford to stay in school? Lots of part-time work at McDonald's and Walmart part-time. Still can't afford that? There is student welfare. You can get student welfare. There is a way that you don't have to live on a street. Even if you're living in a room, in a house with 10 other people, you got to tell me that that is better than living on the street. You can stay in school. You can. You can go to college. It's accessible in this country. You don't need any kind of credentials to go to college. Anybody can show up to college. It's government funded. That's the point. It's government funded, so anybody can go. So there's nothing stopping you. You can get loans. You can become a carpenter. You can become a plumber. You can become an electrician. None of these require that you have an IQ of 120 or 130 to do, right? There is welfare. There is I'm not familiar with all of the social programs, but we have a lot of social programs. You have free healthcare in Canada. Now you have free dental care in Canada. There is no reason why you need to sleep in the streets unless you choose to sleep in the streets, and unless you're so freaking lazy that you don't want to do anything. You want life to happen to you. You don't want to earn money. You want to get money. Well, then you are right where you belong. But at some point, we have to make society, or at least let society off the hook for the failures of individuals. You want to live in a free society? You got to answer that question first, yes or no. Do you want to live in a free society where you're free to make your own choices? If you say yes, that means you are free to make bad choices. Period. So what would I do? I'd first figure out why they're homeless. Step number one, can you rule out personal choice? If you can't rule out personal choice, then it is personal choice. All you can do is have a center, not a drug center where you give them free drugs like we do in Canada, where you say, oh, you're an addict. We don't want to stigmatize addiction, so here's more drugs for you. How fucking stupid can you be? But have a center which says, okay, come on in, sit down. How can we fix your problem? And if they don't want to come in and sit down, well, then why is it my problem? Why is it society's problem if they don't want to rise to the occasion? And I've given this analogy before. If you want to see the power of free choice, if you want to see what free choice does, next time you go to the supermarket, follow all the really heavy people around and look at what's in their cart. Their cart is full of free choices. Now tell me that they're heavy because of society. They have the choice. They're in a big building full of choices. They have choices in what they can put in their cart. But have a look at what they put in their cart. Follow the unhealthy looking people around and look at the choices they make. They're unhealthy because of their own choices. Society's not forcing them to put that shit in the cart. They did it on their own. Okay? And they don't have the Diet Coke in there. They got the Coke. Right? They don't have the skinless chicken in there. They got chicken with skin. I was in Cleveland one time. I forget the name of the store I was at, and there were two people buying chicken. One said, there's skinless over here. And the other one said, why would I buy chicken without the fat? I couldn't understand. I kept repeating the question over and again. Tell me, why would I buy chicken without the fat? That chicken has no fat. Why would I buy it? I was laughing to myself because it was a rather large woman trying to make her point about why would I buy chicken without the fat? They make their choices, right? Anyways, I still remember that. Where did we leave off? Any thoughts on the Eric Schmidt talk at Stanford that was taken down? Sometimes you can't say the truth. Sometimes you can't say uncomfortable things. I think he made a good point in that is that, you know, if you are looking for a lifestyle, if you're looking to balance work and life and you want a 40-hour, 45-hour work week, startups are not for you. Entrepreneurship is not for you. The C-suite is probably not for you. And maybe even Google is not for you, or any other company in that sense that is a merit-based system. And you want a merit-based system. Maybe it's not for you. And I agree. If you think that you're going to start a business, have work-life balance, you'll work 40 hours a week, and you're going to live an Instagram lifestyle at nights and on the weekends. No, wake up, wake up. Here's the backstory. Now, I've been successful in life, but here's my backstory. For the whole time I was building the CFA business, 2017, 18, 19, 20, no life. There was no part of me that was left. And it was even waking up in the middle of the night to answer questions under the videos, to answer comments, because you got to produce the video, you got to write questions, you got to do the mock exams, you got to get the formula sheet, and it never ends. You got to answer questions. The pile of work behind me. I went from, when I started, I was under 220 pounds. I went all the way up to 249 pounds. I had back problems. I had knee problems. My health was deteriorating quickly. There was no life outside of this. They were the last 4 years of my dog's life where he was more of a chore than a joy, except for the last year when I knew he was dying. I spent much more time with him, but I didn't have the time to do it right. Nobody wants to hear your backstory of what you got to give up. If you're not prepared to give it all up, give up your family, give up your friends. If you're in a relationship, that's going to go. That's going to go. And I used to say this to a couple of my staff, that it's going to be hard to compete with me, because anybody who's going to compete with me has to be in the same situation as I'm in. No family, no friends. Because anybody who's married with kids can't do what I do. They're simply not going to have the time during the day to do what I do. I'm going to see them coming, and they're not going to be able to move as fast as me. And that's why we grew so much in those 4 years, is because that's what it takes. There was no weekends. There were no nights off. There were no dinners out. It was just that. There was no Mark Meldrum anymore. He was gone. There was nothing left at the end of those 4 years. Then the pandemic hit, and the exam was canceled for May, and I came up for air. And then when the exam started again, I had to go back to that prison, and it was a prison. It is a prison because there is no life. It is a prison, and I couldn't do it. And then my dog died, and that's when I decided that it's time to sell. I've sacrificed too much for this. It was time to sell. If you're not willing to do that, don't do it, because that's what it takes. So I think he had a point. People don't want to hear the ugly side of it. They just want to, they envy your outcomes, but they don't envy your inputs. Nobody wants to sacrifice that for 4 years and give up their life and significant parts of their health at the same time to get things done. Oh, no. There's no balance in there. If you're looking for balance, then you have to give up certain ambitions you have in life for your career, period. Because the person beside you is going to sacrifice where you're unwilling to. There is no NBA star, or I don't even have to say star. There's no NBA player, no NFL player, no MLB player, no NHL player. There's no player that was ever concerned about work-life balance. None, ever. There's no Olympian that was concerned about work-life balance, ever. Doesn't happen. So I think he had a good point. I think he said the right thing, but you're saying it to what Jonathan Haidt would say, a coddled group of people now, that you can't say that. Oh my God, they all got to go to their safe spaces now. Any suggestions? I don't need CFA to get a job. Should I complete the CFA level 3 exam first, or learn your applied material and sector study first? Because I found your material more interesting. Well, there are two sides. The reason I have the applied level in there is a lot of the things in the CFA content, while relevant, are unattached from the real world. So that you read about a carry trade, you read about hedging instruments, you read about certain things, but you never actually, unless you've actually done it, you never actually really appreciate it. So the applied level was meant to finish the journey. Okay, there's this concept. Here's how it really works. And with the financial modeling this fall, it's going to combine a couple of readings in CFA. One of the readings they dropped, they had a financial modeling reading. It was long. It was about 100 pages long, and they dropped it. There is a reading on industry and company analysis. So it combines a lot of that along with, we're going to dive right into 10Ks. Where do you find this stuff? If you're forecasting a CapEx, it's not as easy as you think. If you're forecasting costs, especially for manufacturing companies, not as easy as you think, but it can be done. We can model it. Think about it this way. CFA is if you want to study finance. The applied level is if you want to practice finance. So it is meant to give you a lot of experience very quickly. So if you go through the financial modeling course, well, I'm going to call it a course, the exercise that we're going to do with Costco, with CapREIT, and you build a spreadsheet as we go. We're going to do a line by line. We're not going to build a big model and then I'm going to tell you, okay, here, look here, look here. We're starting with a blank worksheet and we're going to enter the first line, revenue. We're going to enter 5 years of revenue. That's as far as we go. We're not going any further till we forecast revenue. Everything starts with revenue. Everything starts with revenue. And we're going to do it a number of different ways. We're going to do it naively. We're going to do it how somebody would do it when they first start. Well, I guess I'll just calculate a growth rate and calculate it out. Then we're going to go a little bit further, and we're going to see if we can fix the number a bit. Then we're going to go a little bit further and a little bit further, and pretty soon we're going to have a revenue schedule with assumptions. Well, now you can forecast revenue because you'll understand the drivers of revenue. We're going to go through everything you would go through in the real world if you had to build a model. So it is practicing finance. CFA is to study finance. The applied level is to practice finance. And by the way, if you look at the logo, I've done this in a video. If you look at the logo for the applied level and you take out the leg of the A, you get the number 4. The CFA has 3 levels. I can't actually say it, but you can sort of say it yourself. Da, 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 right? If you don't need CFA to get a job and you don't have the work requirement to get the 3 letters anyways, there is no rush to complete level 3. But if you have the work requirement to get the 3 letters and all that's standing between you and the 3 letters is an exam, I kind of want to put it on the, not on the shelf. I kind of want to put it in the bag, now. If all that's standing between me and the 3 letters is the exam. But if it's the exam and then a couple more years of work experience, I would think, what's the rush? I can't get the 3 letters anyways, right? And some work experience will just make level 3 more relevant for me. Yeah. Do you think buying apartment with mortgage is a lie? Okay, so you're in a different country. Here in Canada, when we say apartment, that means it's a rental unit and only a rental unit. We don't buy apartments, we buy condos. So a condominium is an apartment for sale, but it's called a condominium. The language we use in Canada, when we use the word apartment, it's nothing you buy, it's something you rent. I think in the US, it's mixed. You call something you rent an apartment, but you can buy an apartment. Whereas I think in Europe, you buy your apartment, but I don't think they use the word condo. So when you say buying an apartment with a mortgage is a lie, I don't know what you mean by a lie. Basically, I want you to think of any asset you buy with debt as a carry trade. Any asset you buy with debt is a carry trade. Will the asset appreciate faster than the interest on the debt that you're paying? And if the answer is yes, it's a carry trade, because the property that you buy is savings. It's just illiquid. It's an illiquid form of savings, but it is savings and you pay for it your whole life. But when you retire, that is part of your savings portfolio. You can then sell that asset, monetize that asset, and do whatever you want after that. Move to a different place, scale down, or just say, well, now I've eliminated my living expense because I own this place. If you expect price appreciation of 2% for the next 10 years, but it's going to cost you 4% on the loan, it's not a very effective carry trade. You are buying, hopefully, an appreciating asset with a depreciating balance. So in other words, you buy something for $1 million, cost you 800,000 in debt, or you're going to use 800,000 in debt. A year from now, hopefully it's $1,030,000 and your debt is 780. So your debt will go towards zero, but you hope that over the long term, the price of the asset appreciates. As long as the appreciation is more than the interest cost, you have an effective carry trade. Right? Except that instead of a liquid money market carry trade, you have an illiquid real estate carry trade, but nonetheless, it is a carry trade. So no, I don't think it's a lie. It's either a good investment or it's not a good investment. There are periods of time where passive strategies do net more alpha. They can't than active strategies and vice versa. They can't. The very definition of alpha is active return. If you have a passive strategy, you have zero active return. Passive strategies don't generate alpha. They generate beta. They may generate smart beta, but it's all just beta. So there is no alpha in passive. I think what you're trying to say is there are periods of time where passive strategies will outperform active strategies. As a group, I may have missed it, but what is your macro take on the carry trades? And do you think managers have moved to better manage the FX rate and interest rate risk surrounding it? I don't know. I think you're asking a very particular question, and I'm not quite sure what the question is. So all I can say is I don't know. Watch your videos and love them. You mentioned you could generate 20% return given $250K in investments. Could I ask why you don't start a hedge fund? Because a hedge fund is a business. A hedge fund is a business, and I don't want another business. And hedge fund managers are in the game more for the love of wealth than the love of the game. And I have enough of my own wealth that I don't need anybody else's to play the game the way I want to play the game. It's just not my thing. What do you think about infrastructure providing sector? Haven't really looked into it too much, but infrastructure is really the definition of infrastructure is really starting to expand to more than just roads and bridges, right? So yeah, I think it makes sense, especially for the U.S. You have a situation where you have aging infrastructure, so a lot's going to have to be replaced. But I couldn't name you an interesting play in that one. Have you engaged in any personal VC activity investing? I did quite a while ago. Left a bad taste in my mouth because the person I invested with was someone of low moral fiber. And I knew that they were. I knew that they were up front, but I didn't think it through. More inexperience than anything. And it was just unsatisfying. That it really gives you an appreciation for vetting the individuals you're investing with, not just, looking at their capacity to make the investment, but what kind of person are you? Are you the kind of person that I even want to be associated with? So that would, I would be focusing on any investment. I would be focusing on the people and the people already involved more than anything else. Is who are these people? How do you think about valuation of U.S. REITs? Premium to NAV is around plus 8% after U.S. REITs rallied 7%. Okay, so you have to look at their balance sheet and their accounting policies. IFRS investment properties are listed at fair value. I think under US GAAP, you can, or you can choose historical cost and accumulated depreciation. If the REIT, if they are primarily in whatever sector you're looking at, primarily depreciated balance, the fair value of their assets are going to be well above what the book value of their assets are, giving the impression that they're trading at a premium to their book value per share. But are they trading at a premium to their fair value net asset value per share? Right. So in Canada, the apartment REITs we're looking at, Cap REIT, when we get to the depreciation schedule, we got a bit of a problem because they report their properties at fair value. So there is no depreciation. There are fair value gains and losses. How do we even begin to forecast fair value gains and losses? Now, fair value gains and losses will affect the income statement below net operating income. And for most REITs, we can say, look, net operating income, because they're REITs, we don't have to worry about tax. And if they have a stable capital structure with interest rate hedges in place, it may be okay to stop at net operating income. So we may make the decision that we don't need to do that, but we're still going to ask the question, how would we do that? For accumulated depreciation, we'd have to have a depreciation schedule, but now we have a problem on the other side is, well, what is the fair value of these? At least in Canada, we're told what the fair value is. We can either accept it or reject it. But if you're using accumulated depreciation, well, what is the fair value? How would we know at what premium this should trade at, unless they disclose to us what their net asset value is based on a fair value assessment? So I would look at the comparability of them first. How are they reporting their asset value? And if it is book value, in other words, depreciated value over time, then it would justify the premium above book value. I said 1 month together with 10-year drop to below 4%. FFO and AFFO multiples are close to 20. When you say U.S. REIT, I mean, what category of REITs are we talking about? All REITs, like all REITs together, or are we talking about timber REITs? You're talking about data center REITs, healthcare REITs, residential REITs, storage REITs. I mean, they go on and on. So which category has those multiples? You may find that there are some sectors of the REIT industry that don't have those multiples, but I'd have to know what what it is that you're looking at first. Do you have a take on the 60-40? Yeah, I think it's solid. I mean, over long periods of time, it has done well. I think I generally don't like the lower dividend yields. I enjoy the outperformance, but I center to 50, 30, 20, with 20 being liquid alts. So there are two components of your return, right? There's the dividend yield and the capital appreciation. And sometimes, well, I was going to say something, there is a correlation between higher dividend yields with lower capital appreciation and lower dividend yields with higher capital appreciation when you get to equity. So, when you think about the yield itself, the yield is one part of your return. You have to look at capital appreciation. Then you have to look at it in light of the risk that you're taking on. A 60-40 portfolio will have lower risk than, a 100% equities portfolio. Mid-20s, everyone I know doesn't see a reason to invest in a sector other than XLK as a 10-year investment. What sectors would you pick up? I think the reason why they don't see a reason to invest in anything but that is because you've grown up in a digital world. You've grown up around technology, and you probably are on different video social medias more than most other people. And the videos that you mostly follow are probably of your own age group, and everyone talks about NVIDIA. Everyone talks about Tesla, Apple, Google. It's what people talk about, so people are drawn to. Also, somebody in their 20s, early 20s, contrary to what you may think and contrary to what your group may think, you have not got it all figured out. You have not got it all figured out. Youth may be an advantage on TikTok, but youth is a liability in the market. At some point, when XLK cycles more than anything else, it'll go up, but when it comes down, it comes down. So it's easy to ride a wave and say, look how much fun I'm having. There's no reason to be anywhere else but here. But when it breaks, it's, God, I really wish I was in some utilities. I really wish I was in bonds. That's when you start getting experience, right? So your age group, mid-20s, I can tell you with 100% accuracy, your age group has not, and when it comes to the market, you have not got it all figured out, no matter what the prevailing thought pattern there is. What sectors would I pick? I'm on the other end of the spectrum, right? I don't feel the need to chase big returns because I can generate big returns from lower returning stocks. So I look for, as Warren Buffett said, price is what you pay, value is what you get. So I look for what I get. I look for value. And oftentimes it's not enough for me to buy something at a low price. I want to steal it. I want a ridiculous deal on it. I want to steal it. You only need 4 or 5 of those a year to hit. And they do come along. Growth, same thing. You only need 4 or 5 a year and they do come along, but you're taking on much higher risk. I can get growth-like returns from a value stock by using the options judiciously, on average, not all the time, but on average. So because I can do that, I'm more happy to play at that level. But that's a lifetime of experience that got me there. Yeah. I mean, I'm not saying that I would never invest in growth stocks or that investing in XLK is a dumb idea in the long run. I'm just saying that if all you see is XLK, all things have a season, and all seasons end, and that will end. That if everyone's only in that, at some point, that's not going to work out. As of now, I think utilities make a lot of sense. I think copper, anything related to copper makes a lot of sense. I think anything with duration makes a lot of sense. I don't know that I would say that there are, in any place else, sectors as much as there are stocks. Depression, anxiety is out of control because it's so easy to get on disability payments saying I'm depressed. That's medical cost. Oh, well, okay. Well, so yeah, it's a game. Okay. Gaming the system. I agree with that. Maybe that's the issue. What strikes you trying to get your GT strangles? $8 for October. $8. It's not it's an $8. $8. $8 put, $8 call. It is the 8. Yeah, it is the 8 that I'm trying to get for. I had to go down to $1.75, and the bid's 165, 175. I don't want to move to 170. I want somebody to hit me, take me out. I got time. And I'm not that, if I don't get them, I don't get them. I would like them, but if I don't get them, I don't get them. I'm good. The 20F. Yes, the 20F. Sitting level 1 on Thursday. MM as being invaluable. What's your thoughts on the potential MPOX lockdowns? Are there? Oh, I guess there would be in certain countries, right? There would be. Are we going to see some bullwhip monetary policy? So far, it's being treated like COVID was being treated in like December of 2021 or December of 2019, January 2020, that it's an over there problem. So from what I'm hearing around here, it's an over there problem, not really a here problem, even though cases have been increasing in the US. There are cases, right? But I think the difference between this is there is a vaccine for mpox. There exists a vaccine for mpox, so you can go ahead and get vaccinated. There, you don't have to come up with one. There is one. There is a vaccine. So, any thoughts on ticker LNG? No. No thoughts on that one. And I lost where I was. Taking Evo on Wednesday, by the way. Good. When you consider transforming income tax from RSP, does long and inverse QQQ ETF and RSP and long QQQ and margin account work? Yeah, that would. Yeah, that would work. Rationale being inverse ETF will almost surely go down over time. I wonder if RSPs disallow you. I know it's long only positions, but do they disallow you from taking a long position in a short ETF? I wonder if you could take a long position in a short ETF because you are inherently short at that point, but in a long way. You are short by going long. Yeah. Any tips on convincing my employer to pay for the applied level? Oh, that's interesting. I guess I guess you would just have to, yeah, because it doesn't lead to a certificate at this point or any kind of a designation at this point. There will eventually be a sector specialist designation, but right now there isn't. So you could do this. You could simply just buy it and allow your employer to see what's in there. And in seeing what's in it, you could say to your employer, look, I'll buy it. We'll have a look at it. You can have a look at it. You can watch some of the videos. And if you think there's value in here, would you reimburse me for what I paid? And if the answer is yes, there you go. But maybe there's no reimbursement possibility because they don't know what's in it yet. What is the last day for the applied level? There is no last day for the applied level. There is no last day. There was a last day, July 31st, for being grandfathered into all content, meaning that any new content ever added, there'll never ever be a fee. There is some content that will be added in the future that if you have the applied level, it will still be an extra fee for that new content, but that doesn't mean the applied level is done. The applied level has lots of content coming. There are just certain modules that will appear in the future that will not be part of the core applied level. Do you think long-term private equity asset class return should be higher versus comparable public equity? Well, if we think about comparability, a private real estate versus public real estate, it's real estate, right? The private real estate should offer a higher return because of the illiquidity of your position. Now, I'm not talking about the illiquidity of the real estate. I'm talking about the illiquidity of your private asset position. You bought into a private fund. You don't just sell. You got to wait for a redemption gate, or you got to wait 10 years to get your money back. Whereas with a REIT, you could just sell it that day. So you should be getting a higher return just because of the illiquidity. Whether or not the assets produce a higher return series is questionable. You think finance industry is becoming increasingly more relationship management oriented? No. Do you think AI will take away analysts building models? No, won't take away analysts. Will augment, will help, but won't take away. Question: CFA level put options increase convexity, decrease duration, or am I wrong? If you buy a put, yeah, anytime you buy any option, you increase convexity. You buy a call, you increase duration. You buy a put, you decrease duration. Correct. Invaluable for aspiring finance for everything. Okay, there we go. Live in Canada at the top marginal bracket of 54. You said borrowing to invest isn't good at high rates, but the after-tax rate is 54% less at 7% for a HELOC. That's 3.2 after tax. Yeah, because the cost of your margin is deductible from your income, and if you can get equity on your home, I do believe that if you know what you're doing in the market, there's no reason you should ever have a paid off home. Only if interest rates are high. But if you got a low mortgage rate, 3-4%. There's no reason why you should have a paid off home if you can get a mortgage rate at that point, just because of the carry. Just because you could take that and just, even if you're holding a passive market ETF, you can do better in the long run than that. And paying down your mortgage is the same as contributing to your investment portfolio, except you are paying down something that is earning less than what you're earning going forward. So it makes sense in that perspective. Sure. One of the things at being at 54% is if you have a business, no matter how you make your money, whether you make it through a corporation and you pay the lower tax rate, when you take it out as a dividend, you got to pay your own tax rate. The higher your individual tax rate, the cheaper employees are. If you hire somebody for $100,000 a year, it's only costing you 46, right? So all of a sudden you're hiring these people that can produce assets that are worth more. You would never hire them if they can't produce for the business more than what you pay them. So they're producing assets worth more than 100, but on an after-tax basis, you're only paying them 46. So the higher the tax rate, the easier the value proposition for hiring more people. Is it still good to invest in the long term? Sure. You'd have to give me a reason why you don't think so. You save your live, which you're doing right now, divided by 20 YouTube shorts and add it to your YouTube short channel, free revenue. I don't monetize my videos, so it wouldn't matter. I don't monetize them, and I don't want to. They used to be monetized, but I feel that it's just a lot easier without the monetization. I know that when I'm watching YouTube videos and an ad comes up every 7 minutes, it's like, okay, I get that you need to monetize, but it's a 1 hour video and every seven minutes this comes up, it can be annoying. So I just decided, well, if it's annoying for me, it must be annoying for other people as well. Equity research analyst here. Can you please make a video or explain in the Costco financial modeling video in the applied series how lease liabilities should be modeled under IFRS? Yeah. The Costco has a number of buildings that they do not own. Some are land-only leases. Some are land and building leases. But there are lease liabilities, and they would create well, I guess if it's an operating lease, they create an ROU. If it's we'll get to it when we get to it, but yeah, I will take care of that. If you determine that the U.S. was in a bull market with positive trend GDP growth, would you buy big tech companies like Apple, Nvidia, Microsoft? They're expensive, right? I mean, I think they're expensive, and a lot of money going into the AI investment, which I think keeps the hype alive. But if those investments don't have revenue streams later on, the correction is going to be ugly, because you're going to have impairments on all of it. Well, I guess if they're investing in it, it's just going to be an expense until there's a product that has revenue. Then it becomes an asset, but until then it'll just be expense. So yeah, you won't have impairments, but I mean, you won't have any future growth off those investments. What's your take on Oxy? Good cash flow, good management. Little mess up on the purchase that they made. They thought they had a partner on this one to take some of the assets, but they don't. But they know how to roll with the punches. They're going to take it on themselves and focus on enhanced oil recovery on those wells to focus on the debt. And they have said that they are going to focus on the debt. There was an equity issuance but I don't think it was at the Oxy level. But this is why you look for good management as well, right? Is you're never going to predict a company's future perfectly. Forecast all you want. You're never really going to predict 100% because stuff happens. One of the things you want to know that you have in place is you don't necessarily need to forecast all of the extraneous events that could happen. You just need to know that there's a good management team in there that will get through it the best they can, better than another team. And if there's good management in there, you could say, okay, well, look, I don't know when something bad is going to happen, but if something bad happens, I'm pretty sure they can take care of it. Something unplanned happens, I'm sure they know how to take care of it. So, you're betting on the management team at the same time. How much modeling do you do, and how do you rely on said model when trying to analyze a stock? I don't do much. But what I do try to understand is what are the drivers of revenues and what are the drivers of costs. For a lot of companies, costs are so tightly related to revenues that I just need to understand the drivers of revenues. For other companies, revenues are sometimes out of their control and there are drivers of costs. So shipping companies, mining companies, revenues are pretty much out of their control. So when I say revenues, it's P times Q, price times quantity. They can control quantity, but they can't control price. So it's just a matter of, okay, well, what are the cost drivers? Because if the drivers of cost change, they can't just change their price. They can't say, oh, well, our costs are up, let's pass it through. They're price takers. So for a lot of businesses, if you understand the revenue drivers, good enough. If you understand their cost drivers and they're slightly different than revenue drivers, then good. And then what's their strategy? What's their story? Where are they going? What are they going to do to increase their EBIT, or increase their net income, or increase their cash flow? What strategies do they have in place? That's about as far as I go. To develop a whole spreadsheet for it, a whole model for it, the power in doing that is it really uncovers all your assumptions. All your assumptions get uncovered. And that can be useful. But as we build out what we're going to be working on, I think you'll see that once we get past the big categories on the income statement, once we get past revenue, once we get past costs, if we have a company whose revenues are really tied to its investment in assets, that becomes important. But once you get past that, a lot of the other accounts, you don't really care too much about as a retail investor. As an institutional investor, you do have to care. But we will do this on an institutional level. We just won't have access to the same type of data that an institutional investor would have. But we'll do the best we can. It uncovers all of your assumptions, which, like I said, is useful for really understanding what drives this company. But I think after you do one or two or three, you'll find that whenever you start another company, that once you get past a few of the schedules for the income statement, you've pretty much made up your mind. You pretty much know whether this is interesting or this is not going to be interesting. And if it's not, then you can just say, well, I'm going to stop here. I think every company goes into one of three buckets: a buy, a sell, a hold. A buy, you buy. A sell, you can sell, sell, you can sell call downs. And if it's a hold, that's a great thing to do strangles on. So there's always a trade set up on something. So we'll see where we go. But, your retail investors, more advanced retail investors, you'll determine for yourself whether the exercise has value. I think it has value till about halfway down the income statement. Once you get to EBIT, I don't know that it has a lot of value unless there is, some aggressive plan on debt reduction. Then you have to do the cash flow statement, because you have to determine whether or not you're going to have the cash flows to do what you say you're going to do. Same with a growing company. If they're going to grow revenues at a certain level and you need a certain amount of assets to do it, when are you going to run out of cash? So it'll help you forecast how quickly debt will rise. But for most companies, once you get to EBIT on the income statement, you've pretty much made up your mind about what you think about the company. Do you plan to add reinsurance or insurance? Yes, I do. It's in the financial sector, and I think that's the big one that's missing in the financial sector. And if I add that, the financial sector can be sold out as a standalone sector because it'll be pretty much complete. Can you elaborate on your existential crisis in your 40s? Oh, everyone in life gets to some point where they look at the sum total of what they've done in relation to what they thought they were going to do at that point in time, and you're left asking, what am I doing? Um, I went back and did a PhD at 36, so it's a 4-year journey at least. So you're 40 and you're looking around and you're saying, what am I doing? Sitting in, like, I'm still here. Like I never left school. I'm a 40-year-old student. What the hell am I doing? That's all that was. And then, it takes a long time to realize that, well, wait a minute here. This is where I belong. This is exactly where I belong. I just need to get onto the other side of the desk, which is, what the PhD was doing. But it was, everybody gets to that point in their life. Everybody. It doesn't matter. You will all reach a point where you ask yourself, you know, what got me here? Is this really the path I want to stay on? Is this really what I want to keep doing? It wasn't much of a crisis, but it was, everybody faces that. 40 was a tough year. 50 wasn't. 40 was a tough year. For some people, 30 is a tough year because the 20s are over and they're entering their 30s. And where did it all go? Where did it all go? The 20s seem to take forever, so that when you hit 30, it seems like a lifetime you were 20. But the 30s go like that. My God, the 30s, they go. You turn 30, and a couple days later, you're 40. That's what it seems like. And you wonder where it all went. And I think that's what causes you to reflect on things. It's like, where did it all go? I'm 40 now. I missed, because the 30s seem to go far faster than your 20s went. 45% equity, 55% debt in the buy and hold portfolio. Is this too bearish? No. You have to do. Look, part of going through the portfolio construction in the paper account, because hopefully it is a paper account. Make mistakes. Make your mistakes there to see how it feels, and learn from your mistakes in a very safe way. Is it a good allocation? You'll find out. That's all I can say. If somebody says, I bought 200 shares of this, was that a good idea? You'll find out. You'll find out. I can't say you're wrong today because I don't know. If I say I'm short Tesla and somebody says, oh, you're wrong. You can't say I'm wrong, right? You can't say I'm wrong. Only at some future point can you say I was wrong, but you don't know the future. Nobody knows the future. So is it a good idea? I don't know. You'll find out. And it's not, being successful in this game is not always about picking the right things. It's about what you do when you're wrong, right? That you want to, what you do when you're right and what you do when you're wrong. So you can buy 10 things at random. For the ones that you are wrong, what do you do? How quickly do you do it? What is your plan? You can do quite well buying 10 things at random and having a plan in place for when you're wrong, or having some objective criteria that says, okay, if this happens, I'm wrong, and this is what I'm going to do. You can still do quite well. I want you to think about your portfolio as a portfolio of risks, not a portfolio of returns. Risks. Manage your risk. Return will take care of itself. The return in the market will be what it will be. There's nothing you can do about the return in the market. It will be what it will be. What you can do is manage the risk you have. Within equity. Oh, okay. So have you bought calls on GM? No. If so, would you mind sharing the maturities and the logic behind? No, no calls. I'm okay with. I have puts from, what do I have? 48 laddered all the way down to 39. uh, and I sold when it was in the 39s. I sold ladders all the way down, strips all the way down to, I think, 31 in December, and those just collapsed in premium. I've closed those out. I still have them. I have no I've no desire to get rid of any of those. They'll expire on their own in September. What would be your top 3 inflation hedges as of 2024 in North America? Well, gold has to be number 1. That was Newmont Mining. That just made sense. Apartment REITs in Canada, I think, are a great inflation hedge because rents are going up faster than the rate of inflation. Probably utilities. Doesn't Benadryl affect memory? I forget. See what I did there? I forget. I don't know. I don't take it every night. I got to be to the point where, okay, I can't fall asleep. This is the third night in a row I can't sleep. Yeah, I'm popping a Benadryl. All right. Linked to increased dementia risk. Yeah, but what isn't these days? Right? What isn't? I mean, everything is linked to something, and then 5 years later it's no longer linked to it. Something else that's linked to it, then something else is linked to it. And I think you'd have to have prolonged use for a period of time. I find it effective when you have allergies. It's really effective. One of the side effects is you get really drowsy really fast. So when you can't sleep, you think, you know. So the other thing that you could do is NyQuil. If you need to sleep, NyQuil is pretty good. I mean, if you need to sleep, right, and if you're having a problem and you just can't get to sleep, you can't get on a schedule for some reason or another, it's a great thing to use. YouTube remove the hyperlink. I don't know what that means. Take retail food prices. If no price control, how do we seriously address increased usage of food banks? Well, it's availability. They're there. Why wouldn't you use them? I think it's I think it would be interesting to ask the question of the people using the food banks. Do you need to use the food banks, or do you want to use the food banks? There was a story in Canada of students in London, Ontario, international students, part of the, come to Canada, you can study here, you could study there. Oh, they give away free food so that, here's the address of the place you can go and get free food in Canada. That's what they were told. And it's a food bank. And international students were going down, and to them, it was free food. It wasn't, well, I'm in need. It was just free food. So of all the people using food banks and the increased level of people using food banks, I'm sure there are people out there who say, well, if everyone else is using it, why wouldn't I? Why should I go and pay for my own food? I'll just go down there and cry poverty and say, I'm poor. Give me some food. I need some food. If I'm going to get $30 of free food by just walking down there, why wouldn't I go down there? So of the people using the food banks, how many of them really need to use the food banks versus how many of them want to use the food bank? How many of them see it as just free food as opposed to a necessity, right? So I think there is a certain level of that going on. What's wrong with helping poor people? Nothing. Nothing's wrong with helping poor people. I don't know why. I don't know why that question even would come up. At what point did I say there's nothing wrong with helping poor people? Uh, it's how you help them that makes all the difference, right? So go ahead and help them, but choose how you help them. What's wrong with helping people who are addicted on drugs? Nothing. But you can choose to give them more drugs, or you can choose to get them rehab services. Our government has chosen to give them more drugs and to supervise their intake of the drugs so they don't OD, so they can come back tomorrow and take more drugs, because we don't want to stigmatize drug use, right? So we're helping drug addicts by giving them drugs. I think you should put them in rehab. There's nothing wrong with helping them. It's how you help them that I would have objections with. You want to help poor people? I agree. Help poor people. Give them greater access to education. But you want to help poor people by just handing them a check every month? You're just going to keep them poor. Why would they do anything if they're going to get stuff? Why would they do anything? You can't tax them into prosperity, right? You can't tax your way to a prosperous country. And that's what liberals here in Canada want to do, is tax their way to prosperity. You can't do that, right? You can bring them out of poverty, and the best way to bring them out of poverty is with education. It doesn't have to be university. It could be any kind of trade, but education. You want to help poor people by making education more accessible? I'm all for that. You want to help them by redistributing, just taking from me and sending them a check every month saying, no, we don't want to stigmatize you. Here's your check. That guy paid for it. I got a problem with that, because you're not solving the problem. You're perpetuating the problem and even encouraging more. Well, if you look at most progressive, not liberal, but progressive policies, progressive is more left of liberal. They mean well. These are good people who mean well, but their policies end up producing more of the very thing they're trying to help. They end up producing more drug addiction. They end up producing more homelessness. They end up producing more poverty, because they don't want to practice tough love. They don't ever want to admit that there's something called personal responsibility, and maybe it's their own goddamn fault. They don't ever want to say that. They're the compassionate party, or the compassionate group, that says we should care about them. Sure, we should. We just disagree on how to help them. I think we should open the door for them. And if they don't want to walk through the door, then we're done. Our obligation to them is done. Our guilt for their position is done. We're done. You had every opportunity to walk through that door. You chose not to. I think we're done here. But just to hand them stuff, you got to come back next month and hand them stuff. And you got to come back next month and hand them stuff. And you'll be handing them stuff forever and ever and ever. It'll become an entitlement. There's nothing wrong with helping people. Where it goes wrong is in how you help them. You're rich. You don't understand the struggle normally people are dealing with. Yes, I do. Well, it wasn't always this way. I understand it. I understand it quite well. Believe me, there was one point in my life, not when I was in my 20s either, where I had $17 left. I had $17, and it was a question of, well, what do I do next? What do I do next? Right? And it's how you handle that situation that determines what happens next. I understand the struggle. I do. So, I have a backstory, and my backstory isn't one of if you closed your eyes and I told you the backstory of an individual, you would think, well, what chance did that person have? Well, that was my backstory. You would think, well, what chance did that person have? Right? No. I understand the struggle. I do. When you're selling puts, are you selling naked? Yep. Or buying the hedge? Nope. Vertical put spread? Nope. In addition, how do you pick the duration of those trades? It depends. If you have a company that has earnings in early October, sell the September put. Why step in front of a risk event that, earnings are sometimes you can't tell the outcome, right? Um, it depends. It just depends. There's no algorithm I follow. Sometimes there is. Sometimes it's just a simple decision to make. Other times it's, I don't want to go out like 120 days unless there's a good reason to. Normally they're anywhere between 30 and 60 days. Um, it just depends. All right. It depends on how you help them. There you go. Study the Argentina case and you'll see the giving money is always not the solution. That's exactly it. Yeah. Please do analysis of the silver market. Yeah, I've done gold. I've done copper. Silver's just it's the same thing. Silver miners have the same economics and the same setup and the same structure as gold miners and copper miners. Same thing. They may use a different acid to recover the silver, but the process is the same. Cardio at night. Pretty sure that is not good for you. Why? Why is it not good for me? 45 minutes on the treadmill. It's not high intensity. It's just 45 minutes on the treadmill. I don't know why that wouldn't be good for me. If you were poor, I don't think you would be saying that. I was poor, and I did say that. I never felt that my position in life was the fault of successful people. Never. I never that thought never entered my mind. It never entered my mind. And what a silly argument to make. Like, I mean, I get what you're saying. Because you have it, you don't understand. What a silly argument to make. If you wanted to be a successful baseball player, wouldn't you listen to a Major League Baseball player? Right? Wouldn't you listen to any of these people? Or would you say, "Oh, you're a successful baseball player. You don't understand what it's like to be down here as an unsuccessful baseball player"? Would you say that to them? "Oh, you're a successful singer. You don't understand what it's like to be a nobody in this industry." But wouldn't those be the very people that would really know? Wouldn't those be the very people that you would listen to? Wouldn't somebody who is successful in a democratic capitalist system be somebody worth listening to that may have the solution, who has been through it? I wasn't born rich, right? Wouldn't you want to listen to somebody like that? I said, well, what are you going to do? Get your advice from another poor person? You're going to ask a poor person, "Hey, how do we get out of this problem?" Or would you ask somebody who has gotten out of it? Would you ask somebody who has been successful and say, "Well, what were the causes? What were the drivers that made you successful?" Well, number one, it was the right mindset. I didn't let this shit get me down. It was having the right mindset. And if I had to point, let's say the top two things, the right mindset and education. Education in anything. It doesn't matter. It doesn't have to be a PhD, right? It doesn't matter. Would you not want to ask the more successful people? "Look, I'm starving. I can't eat a damn thing. I can't seem to hunt any kind of rabbit. I'm going to ask another shitty hunter how to solve the problem, or am I going to go ask the star hunter how to solve the problem?" I mean, think it through. Who would you go to for advice? "Oh, you're a great hunter. You don't understand what it's like." No, you'd never say that about anything else. Why is it that whenever we deal with this idea of success versus lack of success, that successful people have nothing to say in this matter because, "Oh, you don't understand what it's like." Yeah, but we know the way out. We know the way out, for God's sake. I just don't get that. I can't seem to catch any fish. I'm going to ask that shitty fisherman over there who can't catch another fish how to solve this problem. Come on. I mean, you get my point? I mean, why not? We're a resource. Why not? You're a struggling entrepreneur. Who are you going to ask? A successful entrepreneur, right? I don't know. Call me crazy, but it seems to me that if I had a problem, I'd want to ask somebody who has solved that problem, not a bunch of other people with the same problem as me. Because if they have the same problem as me, they haven't solved the problem. In which case, how much help are they going to be? Anyways, I've beaten that answer to death, right? For Ferris wheel. I get it, Ferris wheel. Pretty sure it's not good. Cardio at night. You're gonna have to explain why you say that. Where you get that from? Tax rants from Mark. Brokers, why are you hating on Mark for being successful? Oh, yeah. What do you think about gold miners? Gold prices rise. Newmont and Barrick seem to be able to keep their ASIC growing at a lower rate than the gold price. That's good, right? And it should be. If you have your, and this is, they can't control the commodity price, but if the commodity price is growing faster than the all-in sustaining costs, their margins will just expand. Look at Newmont, over $50 now. When I first started with Newmont, I sold puts on it at $36.50. Earlier in the year, there was a real chance it was going to be put to me at $36.50 because it hung out below $36.50. I said, nah, I'm comfortable with my $36.50s. I think I sold puts on it a couple of times. It just kept on going up. All the big gold mines are done. They're probably, based on what experts say, there is no tier one gold find left to get. And the average yield per ton has been decreasing over time. We are slowly, unless gold prices go significantly higher, we are slowly running out of gold reserves. They are actually going down. Not resources, but reserves are going down. So gold prices would have to go higher if you're going to continue to meet the demand from central banks and jewelry. Jewelry is the big thing, right? And with more and more lack of recycling US dollars, Saudi Arabia is now not recycling their US dollars, with more and more de-dollarization, and with the move that the US did against Russia. There are real concerns about holding US dollars. There are real concerns about the inability of politicians in the US to even consider rational deficits and debt levels. So gold seems to be the beneficiary. Interestingly, Bitcoin is not. Gold is hitting all-time highs. Bitcoin struggling at 60,000. So what is the new gold going forward? Gold. Gold is the new gold. Oh, Mark got lucky and struck gold with this. I didn't get lucky. It's not luck. No. This is saying I got lucky. If I bought a lottery ticket and only one lottery ticket and I won, I got lucky. But if I was buying lottery tickets for 30 years straight, that's persistence. That's different than luck. Persistence is different than luck. You're bound to win every now and then. That's not luck. The CFA business is not the first business I've ever had. I've been entrepreneurial my whole life. None of them really successful. Some moderately so, but many of them were just complete failures. But I was persistent. I stayed with it. I stuck with it. I kept trying new things. I kept doing new things. Persistence, right? If you're persistent, some of that will pay off. I didn't get lucky. If I had never had a business in my whole life and I said, well, I'm just going to do this and then get lucky. I was good at what I did. I never advertised, and I became the second largest in the world in terms of subscriber count without a penny of advertising. That's all word of mouth. That's not luck, that's skill. I was good at what I did, and I kept my prices low. I built a good business on a good business model with a good product, with a good value proposition, and it wasn't my first business I built. So persistence can look like luck, when it hits. You go out on the water, you see somebody reel in a trophy winning pickerel, and you think, oh God, did he get lucky? But he was sitting there for 12 hours. He had gone through 4 buckets of minnows by that point. Everybody left. He was there. It's persistence. It looks like luck, but it was persistence. If you are persistent with something, at some point it's going to work out for you, because you develop the skill, you learn from your mistakes, you do things better. It's going to work out for you. No. I push back on this luck thing. Besides, I really, in life, didn't get lucky until I started working 15 hours a day. Now, is that luck or is that persistence, right? Not everything you do will work out. If I sell puts on GM when it's at 39 and GM rises to 45, would you say, oh man, you got lucky? Well, no, hang on a second. I got lucky, but I knew to sell puts on that one. If I create a synthetic on XLU when it's at 68 and now it's at 74, did I get lucky, or was that my skill that did that? Right? Not every outcome is luck, especially with somebody who has experience and skill and persistence. That at some point, these outcomes are the result of persistence. Once we accept that this person got lucky, this person, all these successful people got lucky, then we think there's nothing I can do to control my own future because it's all about luck. I got to wait for luck to show up. Persistence. It was persistence that got me there, not luck. I push back on that. Anytime somebody says you got lucky, if it's the first time you ever tried something, you pick up a gun, you fire it, you hit a bullseye, well, you got lucky. Let's see you do it again, right? You're at mid-court, you've never thrown a basketball, you throw it, nothing but net. Well, you got lucky. Let's see you do it again. But if Michael Jordan throws a basket from mid-court and nothing but net, that's not luck. That's not luck. That's skill. If you've never seen Michael Jordan before and you only see one shot, you'd say, wow, that was a lucky shot, because you don't know. You don't know the backstory. No, I didn't get lucky, man. I didn't get lucky. And I didn't strike gold with the CFA program. I struck gold with the skill set that I had, which is that I've always been very good at being able to break down complex things in teaching. I've always been very good at that. I just wish I would have recognized it sooner in life. If life had dealt him a different card, views would probably be different. Life did deal me very different cards. Life did deal me very different cards. Finished level 3 today. Been studying with you since level 1. Open YouTube looking for some music to play and found you live. Do you want me to sing? Just wanted to thank you, no matter past today or not. Thank you. Well, no problem. You create your own luck. Yes, you do. Okay, and there's a conversation going back and forth. I won't read it out. Do you know of Gary Stevenson? Why does that name sound familiar? Gary Stevenson. If so, what is your opinion on what he says about inequality and the rich slowly killing the middle class? Gary Stevenson. Well, the rich are not slowly killing the middle class. There are no rich people. There are successful people and there are less successful people and there are unsuccessful people. Watch the language that you use and the language that other people use. Who was it that said this? And I forget who said it, is that tyranny doesn't come in the middle of the night kicking down your door. It comes in the language. Watch the language. Was it Noam Chomsky that said that? I don't know. But the choice of words you use, reframe things and they sound very different, right? Gary Stevenson, the rich are slowly killing the middle class. How? Successful people are killing the middle class? I'm not on that mailing list. I've never been invited to the meeting of how we can crush the middle class. That's never happened. So if there is some argument to that, it can't be insidious. It has to be structural. And if it's structural, he'll have to lay, as long as he's laying out his arguments to show how it's being done, but it can't be insidious. It can't be behavioral. It has to be structural. And if it's structural, the structure works both ways. So what kills the bottom 70%, what kills them is consumerism. What kills them is free choice combined with consumerism. 70%, the bottom 70% basically, spend every penny they make. They don't have wealth, not because they don't have the ability to have wealth. It's because they suck with their money. They make bad choices with their money. So there are many people in the middle class that could build a lot of wealth. They choose not to because they have a house full of stuff. Then they have a garage full of stuff. Then they have 3 vehicles depreciating in the driveway. And then when they have a lot of stuff, they get a storage locker to put their stuff in. Stuff. They got to have more stuff, right? That's why they have no wealth, because they buy a lot of depreciating assets. Free choice. Free choice is the biggest threat to most people than anything else. Free choice. And I've said this before. You want to create a successful person, give them to me. I will put them in free choice prison for 3 years. They are not free to watch TV and watch whatever they want. They are not free to spend their time doing what they want. They're not free to eat what they want. I will make all the choices for them. You will get up at this time. You will do this activity. You will then do this. You will then read this book. You will then go to this class. You will then spend half an hour in the gym. Healthy body, healthy mind. You will not eat that food. You will not eat this food. You will not drink that alcohol. You will not smoke that marijuana. You will do what I say. In 3 years, you will be a different person. You will have a different outlook. You will realize that you have this huge potential inside you, but what was taking it away was all of the free choice that you had, right? You want to help people, put them in a free choice prison, strip them of their free choice, and in 3 years, you let them go. They will be a better person, right? So I think Gary Stevenson might be pointing to something and ignoring free choice, stripping the individual of their own ability to make their own choices, denying them that right by saying it's not your fault. We'll find somebody to blame. We'll find someone else to blame. The other thing I'd have to know about Gary Stevenson is, why is he saying what he's saying? Is it because he wants to build an audience? The middle class is the bigger audience. Is it because he wants to sell them something? The middle class is the bigger audience, right? Why do you say what you say? If I want the bigger audience, I wouldn't be talking to you guys. I wouldn't be talking this way. I would be talking to the bigger part. I'd be saying that Bitcoin's going to the moon, and Tesla, there's never been a company like Tesla. I would tell people exactly what they want to hear. I'd tell them it's not their fault. I'd tell them that they're absolutely right in everything that they're thinking. I don't know Gary Stevenson. I don't know why he's saying what he's saying. But in everything that people say, there's always missing variables. Rule out the missing variables first. Financial modeling course, would we need to have a paid service such as Koifin to get the data? No. We're going to rely on publicly available data. The company's 10Ks, 10Qs, investor presentations, conference calls. That's all we need. You don't need any other data provider. Nope. People work hard, but working smart is the key most people don't realize. Okay, that's still a conversation going on between a couple of people there. Yeah, okay. Well, let me find something that is in the conversation going back and forth here. People, big argument about it's mostly luck, it's not luck. If let me finish with this. If you want to get lucky, start working a lot. Work 15 hours a day. You'll start to get lucky like you wouldn't believe, right? Things will just start to happen. Things will start to work out. You'll get lucky. I got lucky in my weight loss. I'm down to 227, by the way. I'm at a 7-year low. For me, That's huge because I broke 228. So I mean, I got lucky, but I didn't really get lucky in my weight loss until I started intermittent fasting, cutting out carbohydrates and reducing all of my food to low glycemic food. Once I did that, man, I got lucky in my weight loss. See where I'm going with that? All right. All right. Yeah, you want to get lucky? Just start working a lot. Okay, it's a long conversation there. How you would think about what time have we got? Oh, we're okay. Time to scroll down. Oh, I was almost at the bottom, anyways. Let me answer 10 questions on the way up, and then we're gonna head out. I didn't see that we're 3 hours 26 minutes. Still got 188 people on, which is pretty good to last 3.5 hours here. Luck is the crossroad of preparation and opportunity. That is Descartes. What is it called? Descartes something. Luck is when opportunity and preparation meet. Descartes. I forget the name of it. So you're telling me that taking advice from unsuccessful people isn't the right way to become successful? That's well. Can you generally comment on private credit environment, especially for direct lending? I don't know enough about it. I don't know the size of it. They're typically levered loans. Levered meaning that you're lending to a company that already has a high level of leverage. So they're typically levered loans, typically high yield, typically, well, they're always floating rate. So it'll be, and it's usually a fairly high floating rate right now with money market rates at 5.5. You're going to be like 800, 900 basis points higher if they get paid back. I don't know I don't know if they would have to follow the same because they're shadow banking, right? So they wouldn't be, I don't know if they would have to follow the same regulation in terms of reserves against loan losses or even reporting that. So if they don't, then it's one big black box. I mean, other than knowing people in the private credit space that you can talk to, I don't know where you would get a lot of good information, especially if it's private. I mean, different rules apply. So I don't know. I don't know too much about that. Yeah. Okay. Still a lot of conversation here about is it luck? Is it not luck? How tough are CFA level 3 evaluators? Well, they're not. They're not tough. They have an answer key. You have to provide the answer. They generally want to give you marks, so they will look for ways to give you marks. They're experts in that particular question. They're not trying to fail you. They're not that jaded professor who fail them all. These kids today, they're not trying to fail you. They're trying to pass you. So I don't know that the level 3 graders are a risk factor at level 3. I wouldn't say that's a risk factor. When does the NDA for the sale of the website end? I don't know. I mean, you have contractual agreements, and then you have moral agreements. I don't think it's my place. I mean, they have you sign an NDA because they don't want you talking about how much they paid for something. Even in the lack of an NDA, if they said, "Listen, just don't say anything about it," I would have held to that. It's if they wanna say what they paid, they're willing to say what they paid. That's fine, but I don't know if after the NDA expires, I'm going to come out and say, "Here's the number that I got." Um, probably not. Do you listen to Jordan Peterson? Not really, no. Not really. I think, he was interesting in the beginning. I did listen to him quite a bit. I wouldn't say quite a bit, but I mean, I liked listening to him because he was educated. He spoke well, and he was educational to a point. Then he got famous, and then he embraced that fame. And in embracing that fame, he doesn't want to lose it. So now he produces content that is less intellectual and more inflammatory, that is meant more as red meat for his audience to keep his audience. So, it's kind of like the REM song "Losing My Religion," that he's saying whatever I think he feels he needs to say to keep the spotlight, and I feel that he's lost his authenticity. I mean, some of the videos come up sometimes. I'll start listening. I go, okay, come on now, like, come on, So it's more like, he's lost his religion along the way because he's in the spotlight. He doesn't want to lose the spotlight. He'll say whatever I think keeps him in the spotlight. And so I don't find that he has that authenticity anymore, and I'm just not interested in inauthentic people. He's doing quite well for himself. He's got his audience, and he know what he wants to do, and he's delivering, I think, what he feels his audience wants to hear. I'm not his audience anymore. On the subject of finding your aptitude for teaching, any advice to someone in their 20s still trying to discover what they're good at? I don't even know if you know in your 20s what you're good at. In my 20s, I knew I was a good student. I mean, I knew that in grade 1, in grade 2, in grade 3. You can't be unaware of it. I mean, if you are at the top of your class, you cannot be unaware of it. It's a source of pride. It's a source of your identity as you grow up. It's what you are. Just I didn't know that I didn't know I didn't see teaching as a career only because I was in a business school. It's so tutoring and being a GA, a TA and a GA was just something you did along the way because it was just extra money to make through university. It just never occurred that, why not do this? When you're 25, teaching wasn't the pathway to being a millionaire by 30, which everyone in business school thinks they're going to be a millionaire by 30 or has the goal of being a millionaire by 30. You're not going to get there by teaching. Teaching is a form of public service, right? It's not a pathway to riches. It just so happened that in a more digital world, it can be. In the 80s, this would never happen because the technology just wasn't there to allow that kind of opportunity. So, as technology changes, it opens up opportunities for something that never would have happened. Uber couldn't exist without technology. Airbnb can't exist without technology. So Airbnb has created how many Airbnb entrepreneurs that own 8-9 condos and make a good living renting those things out. So it's in my 20s, it wasn't a thing because the technology wasn't there that made sense. It wouldn't have made sense. Even though I was good at it, it wouldn't have made sense. Not for the goals that I had. So you're probably not going to figure it out for quite some time, which is okay. In your 20s, you probably really shouldn't know too much yet unless you have some particular skill that you've always had, that you this is what defines you. Then maybe something in there, right? Okay, I think we're good. There's just a lot of back and forth, which is good. I mean, it's people have different opinions about things. It's always good to have some kind of conversation. All the comments I read were civil. Nobody was calling anybody names. So great. That was actually kind of good. Whether it's luck or persistence, to say that that luck doesn't play a role would probably be wrong. But the world is full of luck. The world is full of opportunity. It's full of opportunity. It's full of opportunity, and it can look like luck. But if you know nothing about something, you can't spot that opportunity. The more you learn, the more you know, the more opportunity you see, the luckier you're going to get. So you can say that some things are a function of luck, but as an academic, you like to break that down. It can't be just this thing called luck. There must be something else. What creates luck? And when you start learning, the market's a good example. When you start learning about the market, I looked at telecoms, found AT&T. Was that lucky? Right? That opportunity was right there. But there's opportunity everywhere. There's opportunity in biotech right now, but I can't spot it because I know nothing about biotech, so I can't get lucky in biotech. I can't get lucky. But once I start learning about it and being able to spot where opportunity was, it may look like luck. So you want to try to break things down as much as possible, that if society or the structure of society creates this thing called luck, what is the structure of society and the interaction of individuals that creates this emergent property called luck? And if you can figure that out, then off you go. I think I've got it figured out, is because I have seen a relationship between expanding your horizons in terms of education and being able to recognize where opportunity is. And when you take advantage of opportunity with some experience, it can look like luck, but I don't know that I would say that it's this emergent property called luck that cannot be distilled down to some driving force. Now, there is a PhD dissertation for any of you sociology students out there that love listening to a white, straight, successful conservative. 5 of the worst things I could be to any sociology student, right? So, all right. Success is a function of opportunity, persistence, luck, preparation, mindset. Well, like I just said, I would take luck out of there and say that luck is a function of other things. You haven't broken down luck enough. I don't believe it's an emergent property. Let me explain the difference between an outcome and an emergent property. An outcome, you can break it down to a function of some inputs, right? An emergent property, you cannot break it down to any of the component parts. It is something that happens at the level of the whole. I don't think luck happens at the level of the whole. So a good example of something that happens at the level of the whole is water. The water has within it an emergent property. You can break water down into hydrogen and oxygen. These are both compressible gases, but combined together, they create water, which is an incompressible liquid. That is an emergent property at the level of the whole. You can't break it down to the hydrogen or to the oxygen. It only happens at the level of the whole. I believe luck can be broken down to the inputs. I don't believe it is an emergent property. It is a function of some inputs. So I would then have a nested function statement in your function statement. Success is a function of opportunity, preparation, function of luck, of which you can break out into other things, preparation, mindset. Yeah. Can we do poem streams? Yeah, I think I should do another one soon. I thought I found a good one, but I like the deeper ones, the ones with a lot more meaning, the great classics. It's just finding the really good ones. Okay, look, 3 hours, 38 minutes. It's 10:53. I don't think I'm doing 45 minutes of cardio tonight. I don't think I'm doing anything tonight. but I do need to unwind because I can't go to bed all wired up like this. All right, that's it for tonight. I'll be on again next Sunday. Ciao. Bye.